Good morning, everybody. Good morning, and welcome to the Education Room. Good morning, Joel, D-Rock, Ron, Dwight, Gene, Safia, Bobby, everybody, Jim, Gino, Books 5442. Good to have you. How's everyone doing? David, Chef, back in the room, I see. Nice to see you. Guys, everyone doing all right today, I hope? Feeling good? Had a good breakfast? Staying hydrated, stretch it out? Ready to kick butt and chew bubble gum, right? And we're all out of bubble gum, so let's just kick a little butt. Guys, I'm Mark. I have a list of new people that these salesmen keep giving me, and I love it. I love seeing you guys coming in, um, getting into the room. So I'm taking a look just to make sure. Guys, if you are brand new, and I know that we're just now 9 a.m., don't be shy. This is your room. No more working for someone else. Amen. My boss is an ass. I don't know if you guys have met him. Good morning, John. Or Alan. I said John. I was thinking of John. Um, my boss is a jerk, you know. Grew up with him. Not really. My boss is pretty rad. It's cool when you become friends with your siblings later in life. Not competitive. Actually, super competitive. We're good. Guys, let's roll into the day here. Now that we're starting to get some people filing in. AC, nice to see you back in here. Books 5442, that's a new one for me. Um, Welcome. Nice to have you here. Nikki P, good to see you back. Man, I want to show, before we do anything, guys, let's talk about news, right? What does news do? I don't care what the news says, guys. I'm not a news guy at all. But today is Thursday, October 19th, and at 8:30 a.m. we had unemployment claims, which was a red high impact news, which means that the market can move a little bit. It can shake a little bit. It can change directions. It's not uncommon to get slipped out of positions. And if you're trading one of those prop firms, it is illegal to trade during high impact news. So every morning I come through and I check forexfactory.com and I look to see when the releases are. At 10 a.m., guys, we have medium impact news, which is going to be existing home sales. It doesn't matter to me. Good morning, Luciana. So prop firms, David, we'll talk about those in a little bit. Apex, Top Step, Take Profit, trading other people's money. It's a wonderful thing to do. Um, 10 a.m. existing home sales. Doesn't matter what they say to me. All I know is that somebody may react, right? Somebody might be sitting on 1,000 contracts in the S&P saying, if the news says this, I'll do this. If the news says that, I'll do that. And when they dump it into the market, it creates problems for the people that are trading patterns. And at noon, Fed Chair Powell speaks, guys. That's going to be a big one. It always is. High impact. Great time to go fix a sandwich, hang out. Class will just be ending right around then. And then not a whole lot going on. But every morning I go through and I check my news, and I want to make sure that I'm checking news. Good morning, Debbie. I wanted to share this picture with you guys because I thought it was kind of cool. Do you guys remember yesterday when we sat and watched crude oil bounce in between termination conditions for 3 hours? Some of you tried to anticipate the break, right? Some of you traded into termination conditions. Um, Guys, it bounced from 10:30 right up to almost 1 o'clock. And at 1 o'clock, we had a high probability trend trade that took us up to our target. And it's a great reminder. 90% of what we do during the day is going to be waiting, guys. 90% is just reading our indicators and waiting for advantages. 10% of the day is taking that trade when the advantages hit. So I wanted to share that with you because I took it. I was like, man, I wonder who else had the patience to wait for that one. Hopefully you guys got it. And then everything that I talk about comes from the education page, guys. Everything comes from this tutorial section. There really are no secrets with Nexgen. We're going to discuss anything and everything that you need to be successful. And we're going to focus heavily in the first hour on the high probability trend trade because this is a trade when each indicator on every chart agrees for the trade, guys. This is when your triggers are the strongest. Um, This is when you have nothing between you and your targets. This is, I mean, there's just nothing going on, no termination conditions. It really is smooth sailing to get you to where you want to be. So we focus on this high probability trend trade because what it does for you um, as a human, I suppose, is you stop thinking of yourself as a trader and you begin to fancy yourself a chart reader. Because that's what we're doing for 90% of the time. 90% of the time, we're reading our charts, we're waiting for advantages, and when those advantages are present, that's when we flip the switch. That's when we become day traders. So, becoming a chart reader, the high probability trend trade is designed to do that for you. It's designed to put you in a position where you can open up your workspaces and you can look at these indicators and you can understand fluently where the market is likely to continue and then use that spot for an entry. You can recognize where the market is likely to go, and that becomes a great profit target. Finally, you're going to understand where the market is likely to stop. And these are what we call termination conditions. And a termination condition can really just kill the market right in its tracks. For example, crude oil got caught between termination conditions, guys, and look at the way it ricochets. Um, your ability to read charts identifies this. Your ability to read charts keeps you out of these problems, and your ability to read charts is going to set you up to enter the market when everything is perfect. And that's what we're going to focus on. We're going to focus on creating the ability to read charts, and we're going to do that through the high probability trend trade. And one thing that I do very much in this classroom is I try to keep it simple, guys. I try to keep it focused. I'm a firm believer that if you build a solid foundation, it gives you this amazing platform to grow from. And when you begin to grow, um, everything starts to come together a little bit. So when we focus on this high probability trend trade, guys, we're going to talk about three simple rules. I want you to resist the temptation to make it harder than it is. I want you to resist the temptation to add in more factors, different colors, news releases. I just want you to keep it simple, simple. And I'm talking to you newer folks, you know, AC, Books, Fern. It's great to have you guys in here. Gino, are you a new name or am I just missing stuff? Looks like we're relatively new. Guys, as we go through and we talk about advantage, simplicity is the key. Simplicity tends to lead to success. And the high probability trend trade is only three rules. That's it. It's three rules, and each rule gives you an advantage. It's the accumulation of these three advantages that create a trade. It's not the other way around. We're not trading hoping that it does something. We're trading an established pattern that provides a statistical advantage with the combination of the three. And these three advantages come to be on only two charts. Everything begins on the large chart. Everything starts on their highest time frame. It's a broad stroke of a brush. Awesome. Hey, Gino, I'm going to tell you right now, Gino. It's like drinking from a fire hose on day one. You're going to get a lot of information coming at you. I want you to feel free to ask as many questions as you want. I have no time frames, I have no syllabus, and we really are designed to be a conversation. So soak it in. If you need a little clarity, let me know. The people that ask the most questions, the people that post the most charts, those are the people that end up where they want to be the fastest. So don't be shy, guys. This is the equivalent of a private session. It's just me and you. So this large chart, one bar, the most current bar on your large chart, is going to define the direction of the market. It's going to let you know exactly which way that market is trending. It's also going to define the momentum in the market. It's going to let you know if the market um, has favorable odds for pushing in the direction of that trend. And then it's going to define the areas. It's going to define those potential likely to stop areas, those termination conditions. It's going to let you know where the people in control are likely to react, likely to make decisions. And those areas can create challenges for us. So we're going to use the large chart for direction, momentum, and areas. And your first two rules of three are met on the large chart. Before you ever turn your eyes to a second chart, you should have the advantage of momentum through rule number one, and you should have the advantage of a clear path through rule number two. Once these two are in place, we're going to turn our attention to a smaller faster chart. This is your entry chart. And this entry chart will refine that broad stroke of a brush. We go from painting the living room wall to getting down around the outlets, around the light switches. And you're going to pinpoint exactly where that market is likely to continue. It's going to create a window of opportunity for you, and this becomes your highest probability entry for that trend trade. This is the one that's going to reduce risk, that's going to increase profit potential. And the only rule that happens on the small chart is that rule number 3, making sure that we're getting in at the right spot. I share a lot of pictures in the morning, guys. You can click on them, save them, put them into a spreadsheet, whatever. Um, but the reason we use 2 charts, and I want to share this, is because it's really just identifying who's in charge. On that large chart, it's the large crowd. It's the one, they decide what direction the market's going. They decide the momentum that's going to be present, and they decide what areas they're going to react to. Guys, we are not in control of the markets. We're only in control of following rules that provide a statistic advantage. The small chart is the small crowd. It's the people that are willing to fight, willing to take a shot and go against that trend, go against that momentum. And we rely on the small crowd to get us to our entries. We rely on that small crowd to get us into the market at the absolute best spot so that we can reduce risk, so that we can maximize profit potential. And as we study these rules, I want to remind you guys that there is a step-by-step path to becoming a confident trader. And it begins with being a chart reader, right? So I want you to post your trades in class. When you downloaded software, your salesperson walked you through TechSmith Capture. If you need any help with that, let me know. But every time you post a picture in class, you and I have a conversation. We're going to talk about what you see. We're going to talk about what you did, why you did it. I even want you to tell me how you felt. Um, you can also use the pictures in class. Maybe you just have a question about something that's going on in the market. Maybe there's a chart read going on and you're like, I think this is the right momentum look, but I'm not sure. Let me post a picture in the room and ask Mark. Let me raise my hand. The person that posts the most typically makes the most, guys. That's the first step. Flood the room with pictures, flood the room with questions, and then use your spreadsheet. Nexgen provided you a spreadsheet when you downloaded the software. You can find it in your Nexgen Study Picks folder. But this spreadsheet is really just a trade journal. Every time you take a trade, the first page of your spreadsheet provides you a spot to discuss the trade that you took, the rules that were met, the way that you felt, and it gives you an opportunity to put some notes on it as well. So you're putting your picture into the spreadsheet and then you're describing it. As you post pictures in the room and you receive feedback, it's great to go back and re-annotate charts to put into your spreadsheet because the idea is that every morning you're going to study the previous day's trades. So if you traded in determination conditions yesterday, you're going to see that through your study today, and maybe you're going to avoid it. If you traded without momentum, you're also going to see that as well. So ask yourself each morning, what worked? What didn't work? What felt easy? What kept you relaxed? What felt forced? And what you're going to do is you're going to begin to recognize patterns not only in the market, but more importantly in yourself. You're going to recognize if you have a tendency to jump in early, or maybe you're getting in late. Maybe you're exiting too soon, or maybe you're not exiting soon enough. This little study each morning is going to help you identify those patterns. When you post a picture in the room, one of the things that I tend to be pretty good at is recognizing the patterns in you as well. A couple weeks of posting, guys, I'm going to know exactly what you're thinking, what you're looking for, and we're going to be able to work together to get you to where you want to be. But it will prepare you for the day and it will accelerate the learning. If you go through this little process each day, that's the first page. The second page is where you're going to begin to create confidence through recognition as you study these high probability trend trades. As people post them in the room, as you go back and you study them historically, I want you to fill the screen section with pictures of what the perfect trade is to you. It's in your Nexgen Study Picks folder, AC, but here, take mine. I just dropped it in the room. Hit that download button or just click and drag it over to your desktop. But this is where you're going to fill up what it's going to take to get you into the market, what your perfect trade looks like, and this is the development of your plan. And then to assist you with that, the third tab is all the stuff that I've stolen from you guys over the years. These are pictures of high probability trend trades. These are pictures of medium probability trend trades. These are pictures of trades where you guys have shown me what you can do with the software, given me your chart reads. And this becomes a great thing. There's about 270 pictures in the green section of next-gen users using the software, embracing the advantages, and finding success in most cases. There's also a section on NASDAQ, new users. Just avoid that one like the plague for 90 days. There's a section on learning to manage your trades, on the patterns that repeat. This is your chart reading section because you're going to see the same thing happen every day. And then a whole section on those likely to stop areas, those termination conditions. Utilize this spreadsheet. It's a huge part of getting you where you want to be the fastest. Um, we're going to take the first hour and we're going to talk about the trigger line and the Fibonacci rules for when it's okay to take a trade. The idea is that for 20 days, your first couple weeks with NextGen, focus on entries. Focus on getting into the market at the correct spot. Focus on nothing more than embracing the advantages and pulling the trigger when they're met. Simulate every day. And guys, go screaming past your boundaries. Go like make mistakes. Break everything. If it can be broken, I want to see it shattered at your feet because making these mistakes and then posting a picture when you do is going to open the dialogue between the two of us to get you exactly where you want to be. And we want you practicing the correct rules. There's a lot of us that are kind of adrenaline junkies. And we think that getting lucky into $1,000 on simulator is a recipe for success. But what it really is kind of a path to long-term failure because the market lets you get lucky every now and then. And then it removes every ounce of luck from you. We're going to simplify today. We're going to focus on this high probability trend trade. I'm also going to give you rules for what we call a medium probability trade. A medium probability trade means that most of your indicators line up, however, a problem exists. And when I say that, it means that you will willfully be forfeiting one of these three advantages. When you have a medium probability trade, you're going to have to manage that trade assertively. Your chart reading is going to allow you to do that. You're going to take quicker profits. You're going to get to a zero loss level. And the introduction of this medium probability trade is going to open up doors to have more opportunities for success. And I'm a big fan. You'll find that these are typically most of your trades throughout the day. But you have to learn the Fibonacci and trigger looks so they're easy, guys. You've got to get that repetition, creating recognition. And that is where your spreadsheet is going to pay huge dividends. And I can tell you right now, if you steal this spreadsheet and just start clicking through, it's going to begin the process of burning these images in your mind. And then it becomes easy when the market is active, when it's moving. So a lot of looking at pictures still is going to make it easier to catch these moves when they actually happen. So we're going to focus on a high probability trend trade. Uh-oh. You deleted it from the instrument manager. Sergio, are you on 7 or 8? Cool. So for 7, just do this. Go Tools, Instrument Manager. Type in CL and search. It'll give you the most current contract. Just click that left button. It'll drop it right back in there for you. To get it out, the right button. Like I don't need 11 and 10 anymore. That's just clutter, right? And then to get this one in there, just click that left button and it'll get you set up, bud. So let's talk about advantages, guys. Let's talk about the rules. The first rule is we must have strong trigger lines on our large chart. The large chart must have strong trigger lines, which means that we have to be trading with the trend. It is impossible to have strong triggers and fight the trend. So if the background on your large chart is green, we're in an uptrend, and you're only looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. And let me show you just how easy that can be. Guys, this is the S&P. What direction are we trending? AC, Books, Fern, who else is in here that was brand new? Gino, what direction is this market trending? Are we going to see who can out-silence each other? Yep, Nikki P, absolutely, guys. That's an uptrend. I'm going to tell you right now, you don't want to be wrong. Be wrong. This is crude oil. What direction are we trending, ladies and gentlemen? Give me your best guess if you're not sure. The background is red. Ooh, Gino, I don't understand bears and bulls. Does bear mean down? I always confuse those. Gino, true story. Hopefully this doesn't terrify you. I have zero experience with the market prior to Nexgen. I confuse bears and bulls all the time. I don't understand technical patterns. Hell, I don't even know what creates these indicators. But I can tell you one thing, Gino, and I can promise this to you, is I can read these things as well as anybody, and I can teach you how to read them. So you're absolutely right. We're down. If bear works, say bear. But we're in a downtrend. And then this is your NASDAQ, guys. We're in an uptrend. You can identify that almost instantly. So you're already on your way. Once you've established the trend, let's establish momentum. There's only one look that means that the odds are favorable for the market to continue in the direction of the trend. And guys, that's strong triggers. This is rule number one on your large chart. And strong triggers are true when your small triggers, these solid lines, break above your large triggers, these dashed lines. It's the separation between the two that lets me know that the odds are favorable for the market to continue up. This is what we're going to call odds favorable momentum in class all day long. In a downtrend, small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. The large crowd has established the trend. The large crowd has established the momentum, guys. It's the space between the two, like scissors open, ready to cut, that lets me know that the momentum is its strongest from the point of separation until they return. This is the best look for, in an uptrend, buying Fibonacci support on that smaller, faster chart, getting into that high probability trend trade. You're going to see it on the large chart. That one bar is going to form a tail or a wick. And we don't trade these tails or wicks. These are actually pullbacks on a smaller, faster chart. You guys in my class are going to be able to pinpoint that point right there where the bottom of the tail is most likely to form. Selling resistance on a smaller chart with odds favorable momentum. Guys, this is where the advantage happens. And if you commit to that odds favorable momentum, what you're going to find is that the market's likely to push in the direction of the trend. And then the opposite of strong is weak. When those small triggers work their way inside of the large triggers, they get swallowed, the scissors close. This is a weak trigger look, and anything can happen up or down. And you'll see this look a lot. It'll precede reversals, deeper retracements. And when you have that weak triggers, you forfeit the advantage of momentum. It can no longer be a high probability trend trade. In these weaker triggers, that anything can happen up or down, it's the exact opposite of odds favorable. So rule number one reminds us that we're chart readers, that we're waiting for advantages. Starting on the left side, I have separation between the small and the large. The market continues to push down. I end up with those anything can happen triggers, and there's a reversal. The market pushes up, creates that odds favorable momentum. There's one of those potential entries right at the bottom of that large chart bar, and it carries up with the momentum right into that anything can happen trigger look again, those weakened triggers, and there's another reversal. This reversal gives me odds favorable. There's another tail, another potential entry, and it pushes down. This is your advantage, guys. You're going to either have it or you're not. You're either going to be in a position where the market's likely to continue, or you're going to be in a position where anything can happen. Commit to that rule number one. Rule number one will also keep you safe when the powers that be can't figure it out, when they can't get their poop in a group and pick a direction, guys. You're going to see large and small triggers contradict one another. You're going to see large and small triggers go in the opposite direction of the trend. When this is happening, this is a fight between buyers and sellers. This is a fight between the people that control the market, and this is a fight that you don't have to be a part of because you're committed to waiting for that advantage of momentum. Because eventually someone's going to win, right? And when they win, we're going to look for that odds favorable momentum. So rule number one is really the first thing, guys. We're looking for that separation between small and large, and that market is likely to continue in the direction of the trend. We're looking at that separation between small and large. This is a market that's likely to continue in the direction of the trend. And then we get a little indifference. And we just sit on our hands and wait for a second. Let's see who's going to end up winning that fight. Is everybody cool with rule number one, guys? This is what starts it. This is the first advantage. This is a large chart, strong triggers. It should set the tone for everything you do. Once you have it, we're going to make sure that we're not trading into termination conditions. Those are those areas that are likely to stop the market. Termination conditions false. This is a large chart scenario, and we're going to look for areas on the large chart that can behave as termination conditions. These areas are divergence high lines, this magenta line that prints from a pivot at a loss of momentum. It can be a divergence low line. This cyan line that prints from a pivot when there's a loss of momentum, guys. All of this happens in the background. Your software takes care of it. It does all the calculations, and it lets you know when momentum isn't following price. We're also going to look at red Fibonacci resistance, blue Fibonacci support, and these yellow 1-to-1s. And these key areas have the potential to stop the market because these are the key areas where the people who move the market are making decisions. Whether it's the buyers taking profits or the sellers getting into positions, these fibs represent areas, these 1-to-1s, these divergence highs and lows are strategic points in the market that you know about long before the market ever gets there, before that decision is made. So when we talk about termination conditions, it's a two-part process. To determine whether or not one of these areas, one of these lines on your chart are likely to stop the market, likely to create an untradeable bounce, likely to create indecision as the buyers and sellers fight it out, the first thing that happens is price reaches the area. The price bars, those dynamic Renko bars that are a reflection of price, get to the decision-making area. They get to that blue fib. They get to that red resistance, those yellow 1-to-1s. When price reaches an area, in this case support, the only thing that you have to do is ask yourself, where are the trigger lines? If price remains above the area, or if trigger lines remain above, the area of support, this is an area that may stop the market, may reverse the market, may create an untradeable bounce. You have to accept that you're not sure, that you just don't know. You don't know if it's going to bounce or if it's going to break or if it's just going to kind of stutter for a little bit. So you sit on your hands and you do nothing. No more short trades into that area. This is the recipe for a termination. This is when we no longer have a clear path. The path becomes clear, and I can use this same picture, but we'll use the higher level of support. Price first reaches the area, the trigger lines don't break, they all remain above. Nexgen users sit on their hands and wait to see what's going to happen. The small triggers break through, and notice that they break through with odds favorable momentum. Now I have an area with the potential to break because of the momentum, but it's not broken yet. This still is not a clear path. We don't consider the path to be clear until both the small and the large triggers get to the other side of the fib, the yellow 1-to-1, the divergence line. When they do, the path is now clear. You can see that support begins to act as resistance. You can see that there is odds favorable momentum. And there's one of those tails. There's one of those potential entries for those high probability trend trades, getting you into the market at the point where it's most likely to continue and taking you with momentum to that next area where it's likely to stop, guys. And this is where Nexgen users have the highest advantage of making their money. So we'll go through a couple scenarios here. Price reaches resistance, none of the triggers break. Absolutely no trades into resistance. This is our safeguard, keeping us out of the market when we reach an area where decisions are being made. Well, buyers took profits, sellers took entry, and pushed the market all the way down to Fibonacci support. And when it got there, None of the trigger lines were capable of breaking. So I can't go long into resistance, and now I can't go short into support. And this is your reminder that 90% of your day is spent reading these indicators and waiting for advantages. Well, the buyers weren't done, and they fight back, and they push it all the way up to Fibonacci resistance. They push it all the way up to that divergence high line, that magenta line, as well as the second level of resistance. This is three terminations in the exact same spot, guys. This is what we call a pivot stop out, when price exceeds a divergence line and goes the other direction, as well as two areas of resistance. And notice how every trigger line remains below that area. This termination creates that full reversal in the market, that full twist, green to red, odds favorable, and we didn't reach one of those key areas yet. So I have odds favorable, I have a clear path, I'm coming from a termination, so we're going to call this a strong top. And there's one of those tails. There's one of those highest probability trend trade entries that we're going to talk about in a few minutes. Your patience is rewarded. 90% of your day is waiting for the advantages, and then you're going to create trust through repetition, through recognition, to never miss this move when it sets up. And you're going to see the same thing from, whoop, that's the wrong one. You're going to see the same thing from Lowe's. And I'm going to take a picture of this one because this one really exemplifies how we just don't know what the market's going to do. All we do is trade advantages. My sellers, I'm going to take credit for them. My sellers pushed with odds favorable momentum all the way to these yellow one-to-ones. And when price reached that area, I asked myself, where are my trigger lines? Well, they all remained above. Therefore, I'm not taking a trade into this area. I'm going to sit on my hands and I'm going to wait. I'm going to gauge the reaction. I'm going to see if the buyers are going to win or if the sellers are going to win. And to be honest with you guys, I have no idea. The buyers give it a good shove. Price goes up. Notice that all the trigger lines remain below resistance. I can't go long. And then the sellers push back. And the buyers fight again. And the sellers push back. And the buyers fight again. Guys, there's never any reason to get caught in between fibs. Never any reason to get caught in between termination conditions. We don't have odds favorable. We don't have a clear path. We're sitting on our hands. And this, honest to goodness, this is the 90%, guys. This is the 90% that keeps you out of trouble, waiting for advantages. Ultimately, the buyers win. Both small and large get above resistance, and resistance begins to act as support. The small triggers work their way outside of the large triggers. And this becomes the highest probability trend trade that a Nexgen user can take. That odds favorable, clear path after a termination, everything says up. And guys, that is an easy winner to the next key Fibonacci area. It's what you do in the 90% that's going to define how effective that 10% can be. Is everybody comfortable with the recipe? Price reaches the area. If absolutely no trigger lines break through, sit on your hands and wait for a second, guys. You've lost your advantage of a clear path. If both the small and the large break through the area, the path is now clear. We're looking for the rules to be met for a high probability trend trade across the board. And then that third scenario, when the smalls smash through, embrace that phrase, absolutely smash through an area with odds favorable momentum, this area has the potential to break. It's not a clear path. The area is not broken. Guys, this will be your first medium probability trade. This will be your first trade with a problem. And the problem is that you don't have a clear path. So you're going to insist on momentum, right? You're going to absolutely insist on the perfect entry if the clear path is gone, and it's going to create a medium probability scenario for you. Guys, this is termination conditions 101. This is probably the most broken rule across the board between new users, and it's probably one of the most important rules. And let's take a look. Let's just open up the S&P. Weak triggers at resistance, the market pushes down all the way to support. From support, it pushes all the way up to resistance. No triggers break, all the way back to support. No triggers break, and then all the way up. And it's kind of floating, but the sellers push directly to support, and all the triggers remain up. And look how that market continues up. And old Gene, yeah. Price comes down, hits those one-to-ones, and reacts, right? Look at support, creates the reversal. I agree 100%. Gene, my biggest problem as a brand new user was termination conditions. And I'm going to tell you right now, I traded into them like I was getting paid to do it for a long time, guys. And I had no idea why I kept losing trades. Because I wasn't willing to post in the room, because I wasn't willing to ask John Novak for help. And after about 3 days of posting in the room, he said, "Hey, Mark, have you noticed that you trade into termination conditions almost every trade? You skip the best trades and you take the worst trades, and this probably has a lot to do with your 12% win percentage." And it was amazing. It fixed me almost instantly. So I started recognizing and trying them. Gene, are you saying your rules weren't met and you chose not to trade? That's pretty smart. I like that. Hey, good morning, Jose. I mean, guys, this is it. And I know that you're being quiet. You don't want to put yes or no or anything like that. And that's cool. I'm going to keep encouraging you guys. Post in the room, post a picture in the room, post a question in the room. Say hello to me in the room if you're brand new. Let me know that you're capable of getting a message in there. Guys, this is the termination condition that uses areas on the large chart. There is one more termination condition that's going to allow you to recognize change. Hey, Fern, thank you for that. It's going to help you see change using your entry chart, your smaller, faster chart that you won't see on this larger, slower chart. Sometimes you have a clear path and everything says down, and that market just kind of goes up from nowhere. Sometimes you have odds favorable momentum in a clear path, and you're thinking, I want to catch that high probability trend trade, and the market just pushes on down. Guys, this final termination condition is going to allow you to see that change on your smaller, faster chart. And it's three divergences in the same price range. And since I have so many new people, I want to talk about what divergence is. And let's just use some arrows and point it out because it's fun. Um, Divergence means when price comes down and goes back up, or price goes up and comes back down. It's just a reflection of the price, the fluctuations. Divergence means that during this push down, momentum didn't follow price. The market is losing momentum every time you see one of those lines. So price pushes up, momentum doesn't follow, I get a magenta line. It happens a second time, I get two. If it happens a third time, this is my warning, guys. The market may be changing direction. The market may be going the other way. It may push up a little, it may push up a lot, but three divergences in the same location is a termination condition, and that's a small chart, the only small chart termination condition. It becomes more powerful when those small triggers work their way inside of the large triggers. You guys will remember that as those anything can happen triggers, those weak triggers. It's just adding fuel to the fire that those three divergences may change direction. And then it becomes more powerful still. And you guys that have been trading for a while and look at patterns will recognize this. When that third pivot is higher than the previous from a low, or lower than the previous from a high, there's one of those head and shoulders patterns. It's the only pattern I know in the market because I use this as a termination condition in my own trading. Three divergences may stop the market. Three divergences with weak triggers is more powerful, and then with that head and shoulders, it's more powerful still. You're going to see this look from a low or this look from a high when the market seems to be changing direction from the middle of nowhere. And guys, these are your terms. These are your termination conditions. Rule number two will keep you safe. I can't stress that enough. Rule number two will keep you out of problems. We watched it yesterday on crude oil. If you were watching crude oil yesterday, this picture is probably a little more pertinent now. 90% was waiting for the market to stop breaking rule number two. Once it did, and small and large got above resistance, I had odds favorable momentum, Guys, I took a pullback to support inside of favorable large triggers. We're going to talk about this right now because rule number 3 is designed to get you into the market where it's most likely to continue. Rule number 3 says that you're going to use a limit order. You're literally going to wait for the market to come to you, and you're going to use that limit order to buy or sell a pullback. A pullback is that small crowd. You guys remember the picture? When the big crowd says up, when the big crowd says there's nothing in the way, when the big crowd says we have momentum, that small crowd, that group of yahoos that want to fight everything, is going to give us a little retracement, a small pushback counter to the underlying trend. We're going to use rule number 3 to identify where that small pushback is most likely to happen. And it's at areas inside a favorable large trigger. So anytime I say areas for a high probability trend trade, I'm talking about fibs, Fibonacci support or resistance. I'm talking about a mid band, or I'm talking about yellow one-to-ones. But the key is that we want those areas, we want those bounce points to be nestled inside of what we call favorable large triggers. Favorable large triggers means that on your small chart, on your entry chart, on that fast chart, your large triggers, those solid or the dashed lines, and your synthetic triggers, which are just the large triggers from your higher time frame, they have little steps on them so you can tell them apart. They should be overlapping. They should be one on top of the other, like a snake riding piggyback on another snake. If you put your hand on the desk and your other hand on top of it, that's overlapping, one on top of the other. And what this does for you is it creates the smallest window of opportunity. It gives you the smallest point where the market is most likely to bounce. By using these favorable large triggers, you're going to be able to reduce your risk. You're going to be able to maximize your profit potential. And you're going to be able to manage your risk. So we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So when everything says up on the large chart, when everything is going north, when everything has odds favorable momentum and nothing in the way, you're making the decision that it's time to look for an entry. So you turn your attention to your small chart, your fast chart, your refinement chart. What happens in that single bar on the large chart happens in typically 15 to 30 bars on a smaller, faster chart. Everything says up. The momentum is strong. Your large triggers should be favorable, meaning that large and synthetic are overlapping one on top of the other, and you're just looking, where are my areas? I'm looking for fibs, mid-bands, and yellow one-to-ones. Everything says up, you've identified your areas, you have the best looking triggers, and now you need that small crowd to do their thing. Now you need that small crowd to say, you know what? To hell with the trend and momentum, we're going to push back. Whoops, wrong picture. Their fight begins with a reversal bar, a red bar after a sea of green, or if the market's trending down, it'll be a green bar after all of those down bars. At the time of the reversal bar, you're going to look for the areas that are falling within those favorable large triggers. Fibs, mid-bands, yellow one-to-ones. Draw a box around them. Use the drawing tool. From your highest point of support to your lowest point of support inside of favorable large triggers for a long, or if you're looking for a short trade, from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. We're only identifying the areas that fall within the triggers. I'm not worried about fibs or yellow one-to-ones outside of the favorable large triggers. I'm not worried about blue Fibonacci support outside of the favorable large triggers. We're only looking for the areas inside, and the tighter they are, or the least amount that there are, the smaller your window becomes. Your job is to embrace momentum, to embrace a clear path, and to embrace the idea that these areas create a bounce point. They create a bounce point like throwing a tennis ball up against a brick wall, and you're going to activate your limit order right at the top of the window, right at that highest point of support inside of favorable large triggers. And guys, this is your first 20 days, learning how to recognize this entry in the moment, doing it by studying historical pictures, doing it by practicing it in the market every day, and asking a lot of questions. So if the large chart, let's put this on here, all caps. Large chart says up. We have the advantage of momentum from rule 1, and we have a clear path from rule 2. Large chart says it's time to look for an entry. Guys, we're going to wait for a reversal bar. And at the time of the reversal bar, I want you to use either your mind or a drawing tool, but I want you to go from the highest point of your triggers to the lowest point of your triggers. This is where we will look for areas. This is not your window of opportunity. Your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. This becomes the point where the market is most likely to continue, most likely to bounce. This becomes your entry for the highest probability trend trade. Can I beg and plead you guys for a why? If you're with me on this, reversal bar, look for the areas inside of the triggers. Guys, we're getting in at the top of this window because the large chart has odds favorable momentum, because the large chart has a clear path. We're not expecting a deeper push. How much work can that small crowd actually get done, right? So when they pull back and they hit that entry, guys, we're in the market with every advantage. We have the advantage of momentum, a clear path, and now where it's most likely to continue. It is a window, though, and I want you to be ready for it to go to the bottom. I want you to be okay with the idea that your Ninja Trader might show you negative equity for a minute, but you're still in the area where the market is most likely to continue. But guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You will not take 100% winners. It's not going to happen. I want you to get it out of your mind. I want you to stop expecting to win every trade. I want you to expect to win more than you lose because of the statistical advantage. But I want you to be prepared if this is one of the trades that's in that 20 to 30%. If the market pushes beyond that window of opportunity, if it pushes, come on, outside of that window, beyond those triggers, we're going to have a protective stop waiting. We're going to manage our risk. We'll take small losers. Small losers are a normal part of a positive equity curve. But guys, this is your safeguard. With all the advantages present, you're going to take this trade 1,000 out of 1,000 times. If it goes beyond that window, you're just going to exit it, brush off, use the word next. I'm going to wait for the next trade. But the idea is that you spend 20 days focusing on this great entry, because this is a trade that you don't want to miss. This is a trade that typically 70 to 80% of the time, when you follow the rules, makes it to its profit target reached. Because you wait for the pullback, your risk is minimized. And when you get a reversal bar in the direction of the trade, you'll minimize it even further behind that reversal bar. Because you waited for the pullback, the distance to your profit target, that point where the market is likely to go, grows significantly. And guys, this is 20 days. I want you to focus on entries. I want you to ask a million questions. I want you to remember that the large chart leads the way, that the large chart tells you that it's time to look for an entry, not the other way around. The large chart establishes momentum. The large chart gives you direction. The large chart is identifying those termination conditions. The small chart whittles it down to a point where it's most likely to continue. And then I'm going to show you how to study this. Let me go to my entries. We talked about those tails on the large chart. We talked about being able to identify that point where that tail is most likely to happen. Guys, we don't trade these tails. If you try to trade the tails, the market is long gone by the time it forms. What we trade is the advantage of momentum, and we trade the advantage of a clear path, and then we refine it down to that point inside of favorable large triggers. And if I circle the tail on my large chart with the rules met, it should line up with an area of support inside of favorable large triggers on the small chart. This is how you're going to be able to study the market historically. This is how you're going to be able to backtest the methodology and really develop trust and prove to yourself that what we're doing works. And I'm going to go back and I'm going to look for rules met. Let's just do this one right here. Everything says down, the triggers are strong, everything says go, and this fib has the potential to break because of all the momentum. If I scroll back just a little bit, that first push is directly to resistance inside of favorable large triggers. It's a pattern that repeats itself over and over. There's three divergences in the same location saying that we're going to have a little bit of indecision to get you out of the trade. And if we scroll back, odds favorable, haven't reached the fib. Let's see what that one looks like at 551. Pulls right back to support right there at those large triggers, guys. This is a pattern that repeats itself. So every day you can scroll back 10 days. And by scrolling back 10 days, you can see how many opportunities there were in the market. You can see how many high probability trend trades there were. You can see how many medium probability trend trades there were. You can go back and back test your rules simply by going back and looking for the best of the best. I can tell you this one was outstanding. How do I know? Because I took that trade yesterday. I had to wait 3 hours. This happened while we were teaching class. And then finally the market broke out and created an easy win. Guys, this is your first 20 days. This is what we're looking for to get you exactly where you want to be, to get you exactly where you told us you wanted to be. A successful day trader, a confident day trader, somebody who can read indicators, find advantages, and make money. That's going to be the goal every day, guys. You and I are going to work together every day to make that happen. You and I are going to have conversations every day about what you see, about what you think, about what your chart read says about what's happening in the market. But you have to focus on your rules initially, guys. You have to focus on the best of the best. And I'm going to give you a checklist that's going to help you as you learn these rules. Something to write on your charts when you take these pictures, guys. Is the market coming from a good top or bottom? Is it a termination that creates a full reversal? If it is, it increases the likelihood of success. If it's not, that's cool. It can still be a great trade, but it means that you may have to manage a little more tight. You may have to use those divergences. Do you have odds favorable triggers on both charts, on the large chart and the small chart? If you do, click yes. Nothing in the way, no terminations on the large chart. Click yes. Area inside of favorable large triggers on the small chart. If all four of these are a yes, guys, I've never had anybody do worse than 70% ever. And if you are honest to goodness interested in being a successful trader, doesn't it make sense to give yourself a statistical advantage every time you enter the market? Let this be your focus, guys, for the first 20 days. Learn how to enter the market at the right spot where your chances of success are the highest. I'm also going to give you this checklist. It's the exact same one, but I've just stolen pictures about terminations creating full reversals, what it means to have odds favorable momentum, and what it means to not have odds favorable momentum. The recipe for having a clear path, and finally the recipe for identifying that window of opportunity where you're going to be entering this highest probability trend trade. Guys, both of these checklists are yours. You should print out the first one and put it on your desktop. You should take the second one that has the pictures and put it on your computer and study it before you start. And now I'm going to give you a plan that's based around entering on the high probability trend trade. Guys, this is your first 30 days. This is the simple plan. This is keeping you focused. This is not the end all be all for you. This is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade and the 50-50 trades. And guys, this is a plan that I challenge people. If you are straying from success, if you're finding that your win percentage goes down, if suddenly you're not making the money that you were making when you were keeping it simple, I triple dog dare you. Follow this plan for 5 days and let me know how it goes. Follow it to the letter for 5 days. I can tell you the people that have done it in this room are hitting 70 to 80% winners. They're getting funded in these prop firms. They're finding success. Simulation, study, class feedback, and continuous practice, guys. This is how you grow your plan. This is how when you see people taking trades outside of the high probability trend trade, they're doing it. They created a plan tailored to their needs, to their pain tolerances, and they're doing it based on their ability to read their charts. So this KISS plan is not designed to shackle you to having to wait 4 hours between trades. This is designed to teach you how to get into the market at the best spot so that you can get confidence through the memory of success so that you can focus on becoming a chart reader and then create your own plan. And the simple plan for consistency starts with never fight the large chart direction, guys. There's no reason to fight the trend. And never fight the large chart triggers. There's no reason to ever fight that momentum. You're running up a freeway the wrong way. And there's a whole convoy coming right at you. So if you embrace this right here, and there's a lot of guys in the room going, man, he's so right. I know I'm right. Because every time I fight either of those, I get my butt handed to me. Focus on your entries for 20 days, guys. Focus on defining your entry point, where you're going to get into the market, where those advantages lie. Take a million pictures, get them in the room, get them in your spreadsheet. These are the same rules that we just talked about for the last hour, guys. This is terminations creating full reversals, odds favorable, no terminations, getting in at the correct spot. This is your first 20 days, guys, figuring out how to get in at the best of the best spot. You're not worried about management. You're not worried about home runs. It doesn't matter. It's simulator. I want you to lose more than you win in the first 20 days so that you can take the lessons and translate them into great habits. But once you figure out the entry, we're going to start working on the management, and your management is going to be as methodical and pragmatic as your entry. It is going to be if-then. We're going to take the emotion out. We're going to take the opinions out. And everything stems from the perfect entry, guys. The perfect entry reduces risk. The perfect entry means that you're getting into the market where it's most likely to continue. And when you take this great entry, there's nothing for you to do. You might as well just sit on your hands, stand up, walk away from your desk, because it's either going to hit your stop, and I'm telling you that small losses are a normal part of a positive equity curve, or the market is going to sing from the heavens and bless you with a reversal bar. And this reversal bar lets you know that it's starting to do what it's supposed to do, that now the market's moving in the direction of the trend. Now the market's moving in the direction of that odds favorable momentum. And for those of you that are a little skittish about selling the market on its way up, you can use this reversal bar as your entry. Once it prints, get in, right? And your new stop goes 2 ticks above it. Your new stop is above that reversal bar. You have minimized your risk. You have established where the market shouldn't go. And now, once again, there's nothing for you to do. You're either going to get that stop hit, it's going to be a small loss, normal part of a positive equity curve, or it's going to hit your first target. And guys, this is my favorite part about the plan. Your first target is $100 away. Your first target is only $100. But there's not one of you in this room that wouldn't be stoked if I walked up to you on the street and handed you $100, right? So this $100 target creates endorphins. It creates serotonin, dopamine, whatever it is. This $100 is success, and it begins to create confidence. This $100 means that you got paid. You did it right. You took those advantages and you translated them into cash money, guys. And then you're going to move your stop to break even. So not only are you the hero of the moment, but you also have nothing to lose. You have no risk on this trade. And the idea behind this isn't that that is the safest stop. It isn't that that's never going to get hit, because it's going to get hit a lot. The idea is that with money in your pocket and absolutely nothing to lose, it's easy for the average user, to embrace the idea that when they got into this trade, the large chart said that you had momentum. The large chart said that there was nothing in the way. The large chart told you that the market was likely to continue to that next area. So with nothing to risk, money in the bank, it makes it easier to hold for that second target. And guys, if you hold for the second target and it hits it, that's a $200 or $300 trade. $100 on your first contract, $200 on your second contract. And I'm going to tell you right now, guys, you can make a living off one successful high probability trend trade, because $300 a day is $1,500 a week, is $6,000 a month, is $72,000 a year. And that's not bad for 8 minutes of your life, is it? For sitting on your hands and doing nothing. And then when you start getting comfortable, maybe that 2 lot becomes a 4 lot. And suddenly, it's $144,000 a year, right? And then you start getting up into that $250,000 when it's a 6 slot. But it's the same trade, it's the same advantages, and it all stems from your ability to read charts. It all stems from your ability to get into the market where it's most likely to continue, and then to identify when it's time to give up and wait for those advantages to come back. So guys, this is your high probability trend trade. This is the first hour of every classroom that I do, guys. This is designed to make you a chart reader. This is designed to bring you confidence through the memory of success. This is designed so that you can get recognition over and over and over again until it becomes easy. It is a foundational study, guys. It's not a wake up and be a day trader. I want you to embrace the idea that there's a path. I want you to embrace the idea that the first thing to do is to figure out which direction that market's moving. Most of you already have this one down. You could teach a class on direction, right? Green is up, red is down, and I'm only looking for rules to be met in the direction of that trade. Once you establish the direction, this is the first bite of the elephant, you need to make sure that there's momentum. This is the second part of study, right? We're laying bricks in that foundation. But once you can identify a trend and you can say, I absolutely have strong trigger lines, the market is likely to continue in the direction of the trend, guys, then you're just going to say, well, did I run into anything? Did I hit a termination condition? Did I reach an area that may stop the market, that may create indecision, that might make a bounce that I can't trade? And if the answer is no, I haven't reached it, you're going to turn your attention to the smaller chart. You can't put the horse before the cart, guys. You have to be cool with direction. You have to be okay with momentum. You got to be able to figure out those termination conditions, and then we're going to refine it down to the entry. And this is why I say take a couple weeks to focus on that entry. Take a couple weeks. Allow yourself to be a student. Allow yourself to be new. What you're going to find is that I'm here every day to help you. All you have to do is raise your hand. All you have to do is say, hey, Mark, let's talk about momentum. I'm not sure. Can you show me some examples? Hey, Mark, I'm a little wonky on terminations. Here's a picture. Is this a termination? And then, hey, Mark, I think I got it at the right spot. What do you think? And I'll give you feedback every day, guys. And this is literally a private session. Once you post a chart, I'm going to open it. And when I open it, I'm going to say, man, look at all that momentum. Look at that clear path, Bobby. And it's coming from a termination that created a full reversal. With all this momentum and a clear path, Bobby says, I'm not even going to wait for the pullback. I'm going to grab hold of this trade and I'm going to make money on the way up as it goes right to the point where the market is likely to go, straight to that Fibonacci area. Guys, this is not a high probability trend trade. This is Bobby executing an outstanding trade based on his ability to read charts. He took his study, his practice, his simulation, and an awful lot of class feedback. He can read his charts like nobody's business, and he found a way to capitalize that suits his needs. Bobby, beautiful trade. And if Bobby had jacked it up somewhere, if Bobby had traded into a termination condition, if Bobby didn't have momentum, if Bobby was making just some sort of catastrophic flaw, well, then he and I would have a conversation. Bobby, what were you thinking? Did it blow through 1-to-1 or was that condition no longer present? This one right here, Nikki P? Off to the left? Yeah, that's gone. When that quits printing, it's done. And that's the cool thing about the 1-to-1s is they're literally kind of fibs in the moment. And then when they're not needed anymore, they just stop printing. We've had many conversations. Yeah, me too. So check it out, Nikki P. These 1-to-1s started printing right here, and they stopped right here. And right here where they stopped printing, I'm just not worried about them anymore. And you'll see that throughout the day. The 1-to-1s will print and then disappear. They'll print, and then when they're no longer relevant, your software says they're no longer relevant, and that takes them away. You're very welcome. Let's see if we can find a... So these 1-to-1s, I like this. Wow, these 1-to-1s started printing at 3:29 a.m. And they remained relevant. They acted as resistance right here beautifully to keep you out of the long trade. They did break here, but they are still in play. And actually, if you look at it, it just created new one-to-ones based off of a different pivot. And then they acted as support to the tick. Isn't it amazing, guys? Your software literally adjusts during the day to give you the absolute highest advantage. And now we have a pivot stop out at resistance. Three divergences in the same spot. Odds favorable momentum. Egads and little fishes, guys. That's a great look, isn't it? Are there any questions about the high probability trend trade? AC, how you doing? Books, talk to me. Fern, how we doing? Gino, Vandam, who else is new in here? Guys, I'm going to keep calling you out. You might as well just answer. I'm telling you right now, guys, I'm one of the easiest guys to get along with. Your success is the only thing that I'm focused on. Sometimes I'm going to tell you things that you don't want to hear. Usually I'm going to tell you things that make you better. So don't be afraid to post in the room. Don't be afraid to ask for help. Squeaky wheel gets the grease, right? Every time. So guys, that's my first hour. I'm going to leave you with crude oil. Yeah, no worries, Gino. I always want to make sure because I'm going to tell you guys right now. I'll tell you my story. Um, Here's my story. So you know where I came from. I was in whatchamacallit. I was in the restaurant industry for 30 years, guys. I was a general manager of a pretty successful restaurant. I was very comfortable with what I did, and I was very good at what I did. I spent a lot of time training managers from all over the United States. I wrote most of the education materials for their bars, and I loved what I did. And then my second spine fusion took me out of the game. I had my second spine fusion, and my surgeon said, "You are absolutely crazy if you go back to this one." So my brother said, "Mark, it's time to learn the software. It's time to learn how to read." And he did the exact same thing that I did with you guys. The magenta lines are where there was a loss of momentum, Gino. So every time a magenta line or a cyan line prints from a pivot, it lets me know that momentum didn't follow price. Are you familiar with MACD BBs? I know a lot of people that have traded in the past are. So your software actually uses that comparison behind the scenes to determine when momentum doesn't follow price. So if we get a pivot with a loss of momentum, we get a cyan line or a magenta line from a high. And what these are is these are literally lines in the sand. These are like, man, this is where the buyers, and look how far off this one was. This is where the sellers stole the momentum from the buyers and pushed it down. This is where the buyers took it right back up to that line in the sand, right back up to that key area with weak triggers. And the seller said, "Nope, you tried once, we're going to stop you again." The buyers just wanted to get to that darn fib. This is a great opportunity. Termination creates a full reversal for the sellers to take over and do what they want to do. And I'm not going to lie, I don't really understand overbought, oversold. I hate to admit that to you guys, but I struggle with those terms. That pulled back to resistance inside of favorable large triggers with odds favorable. That's weird. So guys, I was a manager in a restaurant, and John Novak said, "You can't go back. You've had too many spine surgeries. I want you to learn the software." And I'm not going to lie, guys. I thought because I had had so much success in my previous life that this was going to be easy for me. I thought that because my last name was Novak, this was going to be easy for me. So I took the same approach that I took in high school, guys. I didn't do a damn thing for my success. I didn't put any work into my success. My brother told me, "All I want you to do is write down some simple rules for a trade. Take 10 pictures of longs, take 10 pictures of shorts, and then just participate in class. Mark, post your pictures, ask your questions, and use that spreadsheet. Make sure that you're taking pictures." To which I lovingly replied, "What do you know, 20 years in the business? What do you know, guy that's taught thousands of traders to be successful?" So I fought everything. I didn't post in the class. I didn't use the spreadsheet. And I'm going to tell you guys, at 30 days in, I was a freaking genius. At 30 days in, I was smarter than anybody in this room, probably a better dancer. and I could wrestle polar bears, right? And I was separated from 5 grand in about 2 hours. I took 22 trades, 22 losers, and I had absolutely no idea why. I had no idea what I had done wrong. I had no idea why I entered, why I exited. I had absolutely no idea, guys. And I got slaughtered and I was dejected and I was angry and I was mad. I was so mad at my brother. And I really thought he was full of shit. I'm not going to lie. It looked like fun. And then I thought it was hard, but I was like, I'll just become a simulator millionaire. And 30 days in, guys, I swore that I was brilliant. And I was separated from every penny in my account. They pulled me out of my last trade because I couldn't do it. And then I humbly, tail between my leg, I went to my brother and I said, you know what, John? I don't know shit. Pardon my French, guys, but we're all grown-ups, right? I don't know a darn thing. I thought I knew everything, but I don't know anything. So I'm going to humbly get on that path. I'm going to start taking pictures. I'm going to start posting in class. I'm going to ask a million questions. I'm going to become a chart reader and I'm going to keep it on simulator until I'm winning more than I'm losing and following rules. And guys, I'm up here in the I did it stage, right? And it took a while and it took some humbling and it took an acceptance that this is new. Engineers don't build bridges on the first day of engineering school, and surgeons don't pull out appendixes on the first day of med school, right? You've got to go in, you've got to learn, you've got to do the work. But if you do the work, guys, this is the greatest job in the world. I have been teaching this class from up and down the United States in the last year. I've been teaching this class from different states. I've taught it from hotels, from Airbnbs. I have taught this class from everywhere because when you do this, you can do this anywhere. So give it the respect it deserves. Be a student. Ask a lot of questions. Participate in class. I asked to teach this class because I want to keep you guys from the mistakes that I did. And most of you are going to fight it, and that's okay. I still love you. But most of you can avoid blowing out accounts. Most of you can avoid trading into termination conditions if you just learn the path. So that's my preachy soapbox. I'm going to take 5 minutes, guys. I'm going to stretch my legs, high five my wife, all that good stuff. When I come back, we are going to start looking at the pictures that you guys posted. We're going to start comparing them to the advantages, whether they were present or not. We're not going to grade you on what type of trade you took because everybody sees things differently, right? Some of you like chocolate, some of you dig strawberries, some of you like blondes, and some of you like brunettes. I don't judge you on your preferences, but I do take your pictures and we talk about advantages. We talk about what's present at the time of entry. Odds favorable and a clear path, right? But do you see the trigger lines? The larger down, the synthetic or up. Look at the gap between the two. If you take this trade, you have to be prepared that it may push up to the higher trigger lines. And sure enough, it did, right to the tick. Pretty cool, right? What lesson does that go back to? Do you guys remember? That one goes right back to this look right here, giving you the absolute best of the best advantage. Favorable large triggers. One on top of the other, trending, giving you the highest chance of success, giving you the lowest amount of risk. Everything that you see in the market can be pulled back to these advantages. 3 divergences in the same price range. This market may push higher. It says so right here on the smaller, faster chart. I'll leave you guys with this chart. We'll see if it does. It's never guaranteed, but it certainly could. And I see that somebody sent me a message on Discord. Guys, I'll check it in between, but just so you don't ever think I'm ignoring you, if you send me a message during the day, chances are I'm not going to get it during class. I'll check it after class. Um, so I'll be back in 5. Go stretch your legs, guys. Get ready for the second half. I'll see you in a minute. I am back. Let's get into the second hour. Sergio, I will be in 2 weeks. I think we have a lot of Texas traders in here. We've got people all over. We've got people in Austin, Dallas. We got people down on the coast, a lot of people in Houston. We've got people all over Europe too. Lots of traders everywhere. Um, Kind of a cool thing. So guys, we're going to take the second hour of class. We're going to get it going now. And I'm going to start clicking on the pictures that you guys have posted. I want to remind you that these pictures belong to or the trades belong to the people that took them. The pictures you can steal. It's public content. The lessons are for everybody, not just for the person who posted the picture. So what you're going to get is a lot of opportunity to learn from other people's trades, from other people's mistakes. So remember that it is a community, and the more that you post in the room, well, you're just being a good part of the community. But I do have to scroll all the way up to the top to find these pictures, which means that I can't see the conversation below. So what I typically try to do is take a picture and then scroll down and take a picture and scroll down until we get there. So if I miss a look, if I miss a question, if I miss anything, please let me know, and we will make sure that you get covered. Safia got us started today. Safia had the termination, creating a full reversal, providing odds favorable momentum. She gets with that odds favorable momentum an area with the potential to break. Lets it begin to break, snap back, jumps in. Guys, more of a momentum style trade. She executes it perfectly per her plan and exits at Fibonacci resistance, the point that may stop the market. Nice trade, Safia. And then I put a little thing there because she thought that it was into a termination conditions. But that's where she entered the market, guys. That's a good look. That's odds favorable, blasting through an area. That's an area with the potential to break. She played the odds with all the strength and won beautifully. Notice how big the tail was off of this one, though, right? Went right into it. None of the triggers broke. Pulled all the way back to support. So respecting those terminations tends to keep you out of a lot of trouble. And then she did the same thing going the other direction yesterday, guys. This is a huge one. This is really just a trend trade. Everything says down. The momentum is the strongest. She just gets in a little bit outside of those large triggers and manages to carry it with all that momentum and direction down to the next key Fibonacci area. Wonderful. And guys, always take a second. Always take a second to just enjoy the beauty. And then Gene's posting in here, and he says this one is for accountability. Let's see what happened, Gene. Got back in after an up bar. Worst entry, chickened out at divergence, took profit with all three contracts. Just wanted to start the day positive. There's nothing wrong with that. We're in it to get paid, right? Gene, can we talk about this one? I mean, we can. We will, right? Um, so everything's going up on your large chart. I dig it. And I'm trying to line it up. You are testing my old eyes. 814 and then 814. So it was this one right here, right? Everything says up. The path is clear, but we don't have odds favorable. So let's dissect it just a little bit using those advantages. Without this best trigger look, the momentum isn't as strong. So when you come to your smaller chart, do you notice how you have weakened triggers, how you have that divergence? Oh, the pics are on different monitors, so it's tough for you? These are coming from different monitors? That's okay with me. I'm cool with it. You gave me everything I need. With these weak triggers and no areas inside of those favorables? Oh, okay. I don't know. I've got this blown up 32-inch monitor right in front of me. And then I've got you guys on the other monitor. And then I've got more stuff on the other monitor. I've got mission control over here. Oh, it's not lined up? No, you're fine, man. This is great. I can see your large chart. I can see your small chart. And it looks like you've got your markers in place now. But with this loss of momentum and no areas inside of those favorable large triggers, this fib just becomes kind of a little better spot. This is one of those instances where that up bar paid dividends for you, um, and maybe just a little tight. That's awesome. I love that they did. Just a little tight on that one is all it was. It just wanted to push a little lower. I'm glad that you had the heads up to get back in, though. Everything's set up. They're just like, let's take a little bit of his money and then let's give it back to him. And I think it's a good trade. I think it's probably the best way to handle that scenario. Nice job. I can, Snorri. Gene, so it started moving up and you panicked and got in, and then it came right back down to the area. Let's translate. I thought it was going without me. Snorri, no. Um, oh, you moved the stop. I got you. You didn't wait for the reversal bar. You anticipated the reversal bar. Yeah, gosh, I've done that. Gets me every time, low tick. It's like they have cameras. Yep. No, so Snorri, that goes back to entries. It goes back to the idea that new users get a little fearful when they are buying the market as it comes down, when they're selling the market as it's going up. So what John Novak tried to do is create just a way to ease tensions for new users initially, waiting for a reversal bar in the event that you just don't feel comfortable um, buying on the way down. So when you look at it, let me find his picture. All he's done is he's kind of given you two scenarios, getting in at the area or waiting for an up bar. Neither is wrong. They are different. If you're comfortable getting in at the area, it's outstanding, right? It creates this opportunity to reduce your risk, to maximize your profit potential. But if you're not comfortable yet, then an up bar is a good deal. And let's talk about the other half of that. And I'm not even sure the PDF covers this. Um, Snorri, let's say hypothetically that you have a trade that doesn't have the strongest triggers, right? That you hypothetically have a trade that does have a clear path and it's above areas, but it's not the best look, and you just don't know. Is this one going to retrace to support? Is it going to retrace to the mid band? Is it going to retrace to one-to-ones? Waiting for that reversal bar for a little confirmation just gives you an opportunity. If it is going to go to these one-to-ones, it keeps you from getting run over. So I think it has a lot of validity for when things aren't perfect. And I also think that it's a little bit of a set of training wheels as you develop the comfort to get in at the areas. Does that make sense? Snorri, I think your plan is outstanding, and I don't know that I would change it. That's up to you. What are you going to do with split triggers? So these were split triggers, right? The first one is awesome. After two divergences, it hits those. After three divergences, it tries. After four divergences, it pushes up. Um, One of the things that happens is people that study a lot look for entries. People that study a lot look for entries, and when they find patterns for entries, sometimes they forget to share that it has to be predicated by rules met, right? So one of the things that John and I spoke of is you have to remind yourself that you have to have odds favorable. that you have to have a clear path. And then if your entry is a little wonky, yeah, you could wait for a reversal bar, maybe if you have split triggers. Um, if your areas aren't inside, it's not really rules met though. So embracing the rules, embracing the idea that just a reversal bar isn't your best entry. So for example, here we have a 50-50 with divergence, right? Here's a good example of it. This is for everybody. Termination creates a full reversal gives you that odds favorable, but the large triggers haven't cleared the areas yet, right? And divergence prints. So you're saying, man, I think it's going to be the midband, but it could be resistance above with this loss of momentum in the area not broken. I'll wait for a reversal bar to get in. Does that make sense? And then in this scenario, with the great top, the odds favorable, and no divergence, I'm probably not waiting for a reversal bar. I'm getting in at the area, and I'm riding that thing down to Profitville. So I think it creates a little bit of an opportunity for you to pump the brakes a little bit. You are. That's okay. That's totally normal, Snorri, though. It's normal to try to change what's working. I don't know. It's human nature. I really don't know. It's not clever at all. It's ridiculous. It's why Hold My Beer was invented, right? Being perfectly safe, having a good time at the picnic is awesome. But how about if we jump that four-wheeler over the creek? It's just human nature. It's what we do. It's what we do. D-Rock, is this a good top? What do you think? Is it a termination that creates a full reversal? Or is it overrun and all of your triggers got above and now you're trading into a midband? Don't play horseshoes and hand grenades. Is it a termination that creates a full reversal? Or did all of your triggers get above it and now you're looking at a 50-50 at a midband from a bad top? You didn't even get three divergences here. So D-Rock embraced the idea. This is a strong bottom. This is a no triggers through termination that creates a full reversal. And let me find the picture for everybody in class here. When we talk about a strong top or bottom, guys, that's my recipe every time. Triggers don't break through. There will be instances where you get a little bit of a look, D-Rock, and that's where I'm looking for three divergences in the same location to kind of verify that it was a little bit overrun. But that small and large got to the other side, right? Not just a little eking through. They broke it. The path was clear to the upside. Some of you tried to go long here. And then that was the ES, right? That was this one. Then it's a 50-50. Like this right here. But do you see how D-Rock, it overran and then it dances around the midband and all these fibs and it comes back up and it retests that level and then the sellers say without question, to hell with you guys, we're going down, and that sets up Rockstar. No, that's a 50-50 that it would have to be perfect on. So let's back it up. Not a good top. One divergence gets you in. Two divergences makes it wonky, but look at the split triggers. This is where it's easy to get remorse, right? That was your window of opportunity on this particular short. Do you see it, D-Rock? And let me show you the other thing that I see. This is a chart read, guys. Not a good top. And then I have 1, 2, 3 areas that aren't broken. 1, 2, 3 Fibonacci areas that aren't broken from a bad top on a 50-50 with divergence. And this one happened to push down, and it makes you question everything you know about life. D-Rock, you've done enough study. What are the chances of this one winning? Are they less than the chances of it losing? They're just creating decisions. Yeah, it's low. It's a bad top, and it's a 50-50 with divergence. And there was just a lot of push behind it. I wouldn't take it either. That is not my trade. It's some people's trade, though. And then here we have every trigger broke through, right? 2 divergences again. Large triggers are still below the area. We're directly into resistance and a mid-band. The large triggers are a full bar away. There's that gap theory. It's all about advantages. Great question. I love the recipe. It has to be a no triggers through termination that creates the reversal. And then I'm very comfortable calling it a strong top or a strong bottom. But until I get that, I'm not a fan. But I tend to be super conservative. You may have a different approach. All right. Gene says termination creates a full reversal. There's that 50-50 from a good top, meaning that the termination creates the full reversal. Large triggers are above the area, small triggers are below the area. You take the perfect pullback to resistance inside of favorable large triggers. Gives you an opportunity to make some money. Made money twice, and then you got stopped out on your third contract at +5. That's a great trade, Gene. That's capitalizing, right? Momentum, not quite a clear path. Perfect entry creates a manageable trade. You get paid on the way down, and you're not going to sit there and hope, right? You're just going to say, hey, I'm in this to get paid. Let me grab a couple, secure myself. I love everything about it. Nice trade. Feel like you could make a career on a trade like that. Probably never have to work again if you just hit it a couple times a day. Who's next? David. Bum, 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 bum. Odds favorable. Clear path. David does the jump in move. With all that momentum and a clear path. It is a clear path, David. It is unbroken. You take the entry. You do have a fib right here at 33.46, which means that you have your synthetics off on your large chart. Absolutely, Stu. Absolutely, Joel. David, you're not showing your fibs from other time frames. Is that intentional? Because this blue fib on your 5-1 should be right there on your large chart. But it's not. So this one doesn't have much room. I like that you went break even. I hope it worked out for you. But you're not running synthetics there, David, and that creates a little bit of a disadvantage. We saw it yesterday. Somebody cleaned up their charts and got rid of them. Cost them a little bit there. And then there's that same one. There's not a great top, creating odds favorable, perfect entry right there. Looking to get to support. I like this look, David. You got room to make it down to the fibs. Pulling back on the way. Very little risk. Looks like a second divergence printed. Might have created challenges in there. Joel, you want to do me a favor on the gap theory? Do you want to go to your large chart and see if you can find a picture of it in effect? And then I'll do the same thing when I get down there. Let me get through a couple more pictures here. Have a feeling you have a pretty good idea. All right, who's next? Miss Debbie. I bet you guys this is odds favorable trend trade. Oh my goodness. Everything says up. She takes the pullback, keeps her stop where the market shouldn't go. And then double divergence. She says that's enough for me. I'm out. Debbie, nice trade. Just didn't go. Just didn't go. That happens sometimes. And then Gene, it just didn't get you. That happens sometimes too. Man, that's not your money. That's one of the hardest things to accept, isn't it? When it doesn't give you your entry. And you're like, ugh, I knew what it was going to do, but it didn't get me. And then Safia, 50-50, pull back, then up, money, money. What on earth was this? Safia. Oh, run a lap, my dear. Why was your stop here? With that giant red fib, with those weak triggers, with that divergence on a momentum trade, with a reversal bar. Oh, that was a truckload of hope, Safia. You gave tons, right? Momentum in, momentum out. That's a big difference. That's a lot of money. 50%. Holy Safia. Momentum in, momentum out, right? And it even gave you a reversal bar. It said, Safia, come on. Stop it. Okay. Your plan is your plan. As long as you're okay, I'm okay. And then Bobby, let's see what you did. I think we grabbed this one, right? Momentum in, momentum out. Nice job, Bobby. We saw that one earlier. Because it gave us a great talk about those yellow one-to-ones. And then Gene. 50-50 on the area, right? You take the pullback, one divergence, kind of a late entry. The one thing I want to address, though, is you said that you had a clear path. Do you see how it wasn't clear? Does that make sense, Gene? Okay. I think it's important to understand whether the path is clear or not, because it really makes this recognition of divergence a little more manager prone. And it also, if you look at your range chart, we don't talk about range charts a lot. Your smalls are on the wrong side of the large, right? You've already been bouncing off of that mid band. So we're 50-50, and it may pull back up. And I think it probably did. It's a good trade, but the recognition that it's 50-50 and not a clear path will do a lot for your mindset on management, I think, historically. Okay, that's the 5 range that you used for earlier recognition. Cool. Never used a 5 range. I am a firm believer that I'm not smart enough to look at too many things at once. I've discovered my my weaknesses. So Miss Debbie says when the largest chart gives a termination with odds favorable and the smaller chart has a little challenge with no divergence, she'll get in on a pullback. Same trade. Same trade. Debbie trades every day. Same trade that wins more than it loses. Same trade that has advantages. Debbie, that's beautiful. And then Joel, beautiful. Everything about it. First one is easy. Second one is still pretty darn easy coming from that good top. And the results are exactly what we'd expect there. Nice read. And you're like, oh yeah, it was a good top. I love that. Nice one, Joel. And then D-Rock, did I answer your question if the large didn't break about the 50-50? I just saw that again. I think I answered. Okay. So let's take a look. This was Allen. Termination, right? Oh, that's a 21. Overrun on the 13-2. Odds favorable. No term. Nice entry. Manage out with divergence, right? Alan, I like it. It's still a bad top on the 13-2 and a 50-50. And I'm not even sure that's 50-50 on your chart. That almost looks like a termination condition, doesn't it? With the fib, no triggers through yet. You take it with the momentum, and I love your management. I think it's beautiful. I think getting paid and getting out is such a solid approach to that one. It may have. 10 a.m. update. Yep, 10 a.m. update. Absolutely. Makes sense. You're absolutely right, Alan. I missed that. I had looked at the timestamp. That was your 10 a.m. update, and it took away. So beautiful entry. Creates a manageable trade. Making cash, not giving it back off a pivot stop out. I love it. I think that's awesome management. Not hoping for home runs, just getting paid. All right. So, Nick, remember when we said that I'm really good at identifying patterns in people? Guess what your pattern is? Have you figured it out yet? I got you nailed, dead to rights, my friend. You love termination conditions. You love to trade into areas that may reverse the market. We saw it yesterday, we saw it the day before, and now we're seeing it today. And that's okay because this was my problem too. And I'm telling you what, I'm a pretty cool guy. So we have to go through these things. So every time you take a trade, Nick, your job from today forward is I want you to ask yourself when you're looking at your chart, whatever bar you're looking at the time, right? And that happens to be this bar right here. I want you to ask yourself two questions. The first question, and this is for everybody, not just Nick. Nick was just nice enough to share. He's got some guts to put it out there. Did I reach an area? Fibs, divergence high, one-to-ones, right? So I want you to ask yourself, did I reach an area? There's a fib and a divergence high. Do you see it? And then I want you to ask the other question. This is what I had to do. This is what fixed me, Nick. This is why I know this lesson so well. Where are my triggers? If they are below resistance, it's a term, may stop the market, right? So what this is going to do for you, Nick, is it's going to keep you from being so gung-ho about jumping in at the top into an area that may create a bounce. Does that make sense? Hey, Gene, have a good one. And I think that what you'll find is if you just go through this process every time, it's going to pull an awful lot of losers out because that's okay. Dude, you're going to forget every rule in the beginning. You're going to forget about momentum on one trade, and then you're going to embrace momentum wholeheartedly on the next and forget about terminations. And then you're going to skip both of those and just take the perfect looking entry on the small chart. Of course it did. Rule number 2 told you that it was most likely to get stopped out. The idea is that we just keep practicing, right? We just keep practicing these trades, taking them, posting them, talking about them, and I promise you, Nick, whoops, that's the wrong one. You're going to get exactly where you want to be. And you're going to get there just through practicing over and over. And I'm telling you right now, man, the fact that you have the courage to put trades in the room, you're already light years ahead of the people that skip that step. So we're going to keep doing it. I annotated that one for you. Go put that one in the termination condition section of your folder. Yeah, but it's not even a clear path on the small chart, brother. The small started to break through, but your large and your synthetics are still way below it. Um, every indication that this area is likely to hold, at least in the moment, or create a bounce. You're all right, dude. You are right where you need to be, I promise. You might even be a little ahead of where you need to be right now. Did it? So let's try this. Oh, Nick's like, all right, Novak. I like that you said that. Are you ready? Okay. Dig it. On the small chart, there was room to run, right? Nick, you're making my job awesome right now because you're saying all the right stuff. This is where I lovingly remind you that the large chart defines direction, momentum, and areas, right? Don't give two squats about room to run on the small chart. The only termination on the small chart is those three divergences. The large chart has to say go, man. The large chart has to say, Nick, it's totally cool. That's room to run, right? So if we go back to the live market, let's take a look real quick and see if we have a room to run scenario. That's no room to run. Joel, did you take this picture for me on the gap theory? I'll take and get back. Safia, have an awesome day. Nice trading. So large chart still says hold on, right? Small chart, well, it still says hold on as well. And look at all those hits. Let's see if we can find a clear path. Ah, there we go. See how the smalls break through? Has the potential to break. That's a little better look. But it still hasn't broken yet. And look at the three divergences. Just jacking with you here. And I think that's where we just got in, right? Somewhere right there. So it tried, it wanted to. But this is where that pullback helps too. It gives you time to see if if this reverses and I get odds favorable momentum and a clear path, I'll look for the rules to be met for high probability trend trade short. If this mid band holds and both of my triggers get above 86.66, I'll look for high probability trend trades long. In the meantime, I'm going to let these guys fight it out. Look at the fight. Resistance to the mid band, to resistance, to the mid band, to resistance. We're back at the mid band in an uptrend. And it is a termination condition, but my smalls are above the large. This is where we get excited. This is where like, oh, I'm going to take a trade. I'm going to take a trade. It's got to go down, right? It's got to go down. And then someone on the other side of the room, Nick, is going, dude, everything says up. It's got to go up. It's got to go up. And you guys are going to play ping pong with your accounts. He's going to take 200 out of yours, and you're going to take 200 out of his, and by the end of it, you're both going to be down money. Let it sort out. Does that make sense? That's the hardest thing, man, is doing absolutely nothing when there's nothing to do. And then, Joel, there it is. You did take it. There's your gap theory. What's Joel talking about with the gap theory? Joel, I'm going to give you the microphone because I know that you know this one. So the gap theory, guys, is what identifies a large chart midband as a termination condition. And what the gap theory says is that if price accelerates away from those large triggers, absolutely screams, just whoa, going away from those large triggers, and hits something, whether it's a fib or a midband, it's likely to snap back. And Joel, absolutely nailed it. Check it out. Where'd Joel's picture go? Price accelerated away from those large triggers and it smacked right into resistance in a mid-band. And look at how his large triggers are below a reversal bar marker. This lets me know that there's room to create a full bar, that price is likely to snap back and close that gap. And if we go back to the S&P, I'm going to show you how brilliant Joel is. It absolutely snapped back and closed the gap to those large triggers. It doesn't mean go short. It says don't try it at that mid-band, right? Let it close the gap. Let everything line up. Wait for the best of the best. Joel, that's about one of the best pictures of a gap theory you could have ever shared. Price reaches the mid-band, large triggers are a full bar away, it's likely to close the gap. Price reaches resistance, large triggers are a full bar away. This is large chart, likely to close the gap. Resistance, likely to close the gap. And then here's a picture of it after the gap is closed. Keeps you out of short trades. Great picture, Joel. That was a good one. Great lesson for everybody. And then D-Rock, odds favorable, clear path. MICP down fail, do not take it mid-band. First pullback was a 50-50. It sure was. 50-50, no divergence, weakening triggers. And rules say don't take it with weak triggers, right? Don't give up momentum, D-Rock. I like that. Nice job, Gary. Why not, right? Here's my thoughts on it, guys. Feel free to create a forum for discussion. If I don't have a clear path, if I'm forfeiting rule number 2, if this area hasn't broken but has the potential to break, guys, I want the best look of momentum. That's okay, Gary, 1800, dude. Shut it down. That's a great day. Go to the gym. Go chase the waitress at the deep dish pizza place there in Chicago, right? Walk on the Great Lakes. Anything other than give it back. My money is worth a perfect entry on the 5-1, and this is exactly what D-Rock just showed us. He says, I must have odds favorable momentum. I must have no divergence, and I want to have a great area. And D-Rock didn't have the odds favorable momentum, so he chose not to take it. And sure enough, it overruns the areas and probably would have stopped him out. So D-Rock, that's awesome adherence to a plan. Nicely done. Check it out, guys. Bad bottom, gap theory. Crazy. Terminations for the win again, guys. Terminations for the win. In D-Rock, the better you get at reading indicators, the more likely you are to fabricate trades, is what I find with people, or to overthink them. Odds favorable momentum, 50-50, clear path. You've got the perfect area inside of the large triggers, but the other side of that is that you also have a perfect area inside of the synthetics. Which one's it going to go from with that divergence? What do you think, D-Rock? Do you know for sure? Or do you know without hesitation that it could be either? It could be either. So let's take it one more step, because I know that you're growing with your chart reading. Does a no triggers through termination condition that creates this full reversal, does it support taking a shot? Absolutely. Does odds favorable momentum down here support taking a shot? Absolutely. Does the fact that this fib in midband right there inside of the large triggers lines up perfectly with this fib, is that worth $8? Say, I'll take it from the lowest. If it doesn't go, I'll take a little hickey and I'll wait. And I'm not saying that you should, right? But do you see how if you start embracing advantages, if you start talking through your head, well, this is what I have. I've got a termination that created a full reversal. I've got the best momentum look I could ever hope for. It's hard to stop a screaming train. And when I pull back to this area right at the large triggers with these strong triggers, I mean, jumping, Jehoshaphat, all that strength is likely at least to get me to the trouble spot. And the trouble spot is the divergence low, at which point, don't risk. So you took this one, D-Rock? I don't disagree with it at all. But do you know why my biggest reasoning for digging this one is this good top? And what else do you notice about the good top? It has divergence. The sellers not only reversed the market at the fib, but they also stole every ounce of momentum that those buyers had. I love this trade, D-Rock, and I think that this is a great progression for you. Your job now is going to be to make sure that when you do band outside, you're weighing good versus bad. You're weighing positive versus negatives, and you're keeping your risk appropriate for what you're doing. I think this was a great read. It was close to gap theory, right? It was close to gap theory. The other night, I took my wife out to dinner and a movie, and as we were walking up to the house, I unlocked the door and I opened it for her, and I leaned in for a kiss, and she walked right past me. I was close to getting a kiss, but it wasn't, so I didn't get to come brag to you guys the next morning, right? I get it. Close is good, right? But man, that's pretty. I think you did a great job with it, D-Rock. And it's fun to watch your plan grow. It's fun to watch everybody's plan grow. But it takes a little time, doesn't it? Check this out. Termination to termination to termination to termination. We saw this yesterday, didn't we? I feel like we did. Joel. 3 divergences. Joel says, you know what? I'm going to sit on my hands. Bad bottom, straight to resistance, close the gap. Everything rolls. Everything's below resistance. Joel, you're just not sure if it's going to go up here. This is where Snorri, this is where I think that reversal bar pays dividends. This is where I think that reversal bar is a great idea. You've got a couple divergences. Everything says down, bad bottom, good top. It looks like it's going down, right? But you don't know exactly where from. And after that third divergence, pushing up, split triggers, you don't get a reversal bar till way up here. You think decisions aren't made at fibs? Look at how it dissects it. Joel, I think that was a great read. I think your rules weren't met, and I think that was a rock star decision to stay out of that trade. It's hard when you've been waiting for a trade for a while, right? It's hard when you've been waiting for a trade for a while. So guys, that's the second hour. AC, how we doing? Books, how we doing? Nick, you feeling good? Fern, happy as a clam? Are you clam happy, Fern? Who else is in here brand new? How we feeling, guys? Same stuff every day, right, Gino? I love it. Guys, I want you happy. I want you excited to learn. I want you thirsty for knowledge. And here's the biggest thing, new users. I want you to call your wife or your husband right now and go, this Novak guy's full of crap, and I'm going to learn how to study these rules, and I'm going to prove them wrong. Because if you do that, Gino, you and I are BFFs for the duration, man. You'll never go away. If you take the time to learn it, you'll never leave. So go through that process, right? Go through the process. And Gino, it's day one. You won't have it figured out on day one. Guys, that was termination condition, textbook. Triggers didn't make it through. It is, Fern. It is. Let me show you guys my picture. I showed it yesterday to a lot of you guys. It's so much. I show it so much, it defaults. Guys, here's day one. That's me. Well, actually, that's you. No worries, D-Rock. If I can't figure them out, I'll ask. If you don't want to share them, that's cool. Um, post them, post them, post them, post them. So Fern, Gino, guys, I promise this is it, man. I might as well be speaking in a different language right now. Somebody posted in Greek the other day. It was pretty funny. He goes, "That's all Greek to me." But I'll tell you, and guys, do me a favor. Those of you that have been with me for a week, Nick, every day it gets a little better, right? Gets a little easier. AC, maybe a little more clarity than you had yesterday, I hope. Ron C, are you finally figuring it out? Getting closer? Guys, remember that you don't have to be perfect on day one, that you are a student, that you are brand new at the University of Nexgen. Give yourself a little bit of grace. That's my wife's favorite word. Give yourself a little bit of grace. It's okay, but keep it simple. And the more simplicity, after a month, after a whole month, D-Rock, and Ron's exactly right. The high probability trend trade gives you everything that you need. So keep it simple, focus on the trend trade, and then you'll develop your plan. D-Rock, I don't know what you do professionally, but I bet you weren't amazing at it in a month, were you? I had that conversation with a gentleman the other day. I was like, put me in your field of study. I'm not going to be great in a month. You're going to be the expert, right? And I'm going to ask a million questions. Retired pharmacist? Cool. So day one, you probably would have killed some people if they left you to your own, if they left you alone in the pharmacy, right? It took years to learn. But you look young, so I'm going to say it was worth it. What you put into it was worth the return. And that's the thing, guys. You're making an investment in your future. You're making an investment in being able to make money sitting in your underwear with a cup of coffee, the dog in your lap. Yeah, you are a pup, D-Rock. Got a couple retired pharmacists in here. I love it. It's good stuff. So don't be in a hurry, right? Don't be in a hurry. Guys, I'm going to take 5 when I come back. Nick, we'll start with your pictures. And I love that you're doing market replay and bringing them back to the class, man. That's how you get to where you want to be. I'll be back in 5, guys. When I come back, we're going to finish strong. It's all about your questions. Um, Mike silence for about 5 minutes, maybe 6. Who knows? Maybe 4. last hour. Gary, that's kind of cool. That's the fees that they put on there for the round turns, guys, and that's probably per side, Gary. Um, that looks a little low for a round turn. Could be per side, but what you guys will find is over trading is an easy way to end up under earning. So good stuff. All right, Nick, here we go, bud. So you're going short, termination, everything's going down, directly into a 1-to-1 with all the triggers above it, Nick. Um, Everything looked good except the 1-to-1. I love that. Everything was awesome except the termination condition that I was trading into. It almost sounds different if you say it like that. Everything looked perfect except for the gap theory into the termination. Does that make sense? Even selling the pullback would have given you more of a fighting chance, I think. Selling that little snapback and using an area rather than the middle of space. Termination, full reversal, everything's down. That is a problem area for sure. Waiting for that little bounce. See how it reacts before you commit to a trade. It helps a lot. It really does. So that was a term. And that one ended up working. Nice job. And that one filled too. So now you have to ask yourself, is trading in determinations good? Because that one won. And then here, everything looks good. Everything looks good. Took the trade at the entry point. Future's been trending higher since London markets open. That's cool. Focus on what's happening now, right? And what happened here is you traded into a termination condition again. None of the triggers had broken through yet. At the time of entry, trying to line these up. 830, 830, that was your pullback right here off of it. So it already reacted and was on its way back up. Creates an advantage. Just got some trouble to get through there. I love it. You're trading with the trend. You're going with the direction. Huge advantages. And then still weak triggers, 2 divergences. You're still in the fight. All kinds of resistance, multiple divergences. Yeah, get paid, man. Just get paid. And then 3 divergences in the same location. Do you remember that lesson? 3 divergences in the same location made... It's a great management tool, especially when triggers are weak. I like it, though. I like the idea behind what you're doing. I think that this one creates more opportunity for money if you wait for the pullback, especially when you're bouncing off a fib. Wait for the pullback, man. I know you want to jump in. Getting in at the area is it's just going to reduce risk for you a lot, which is pretty cool. I love reducing risk. And then are these the same pictures? Yeah, those are super blurry, so I have to click on your screen cap or screencast. And this is more of a live idea. But look at the room. All right. So, lesson 2 for termination conditions. Guys, this is great. Nick, I'm telling you, dude, you are the reason right now that this class is effective as it is. True story. Price reaches the area. This is how you get to where you want to be. See how the large triggers aren't through right here? That's the keys to the kingdom right there. Not odds favorable momentum. You're not looking for the tail. You're looking for the pullback to support inside of favorable large triggers. But do you see how the large triggers haven't broken the area yet? And you're thinking to yourself, dude, price made it. Price got through there. Price reaches the area, the triggers will tell you if it's broken. So, oops. Is that live? That's happening right now. Price reaches the area. See how the large triggers didn't break through? See how the divergences? 3 divergences in the same location. There, try to kill it. Over here, there's the tail. There's the pullback to support. Still not a clear path. But notice how there's no divergence. And then here, there is divergence on that not broken area. And it pushes lower. It gets you lower into that frame. Unfortunately, sometimes the market just keeps bouncing off of termination conditions. Let's get these large triggers above 25, right? Let's get this area broken. Let's get that path clear. And then let's look for the opportunity. And I like this example. I am going to circle or square that bar. Look at all the nonsense that happens inside of that bar. This is the decision-making process at key areas. And Nick, and this is why we teach termination conditions every day. This happens inside of this red bar. All of this is happening. All of this fluctuation is buyers and sellers jockeying for position right there at that key area. And the same thing is true here. There's that one bar. And all of this fluctuation happens right there at that key area. And there it is again. And there it is again, right? Over and over. And there it is again. So the idea is that with a little bit of respect on these areas, you can have a crazy awesome advantage. The advantage of a clear path. I like your pictures. Weak triggers, divergence, no areas inside of favorable large triggers, nothing to do. Oops, and then the flip side of that, let me go back to NASDAQ one more time. Look at this one, Nick. Odds favorable, clear path. Everything got below support, it's acting as resistance, and the market pulls right back to it and then finishes the move down. Dude, that's where the money's made. That's the easy look. That's the one that you're like, holy shit, I can't believe they're paying me for this. This is a small swing 1-to-1. I don't even know why it's on that chart. I don't have any rules that use it anywhere at all. So there are people that use it, which is why John incorporates it into the workspace. And I'll show you exactly what they are. I'll go to, whoops, that's the wrong one. I'll go to the glossary of common terms. So there's 2 types of 1-to-1s. The one that we respect is terminations. The one that provide entries in high probability trend trades, those are the yellow 1-to-1s. These are 100% Fibonacci alternates. These are literally fibs that print right in the moment, right? So they print for a little bit, then they stop printing when they're no longer relevant. These are the ones that I respect for terminations. These are the ones that I'll look for inside of favorable large triggers for entries. The other one are the small swing 1-to-1s, guys. And these are, they may create a bounce, they may not create a bounce. They might give, they're based off of tiny little swings and tiny little movements. I like them if they show up inside of favorable large triggers on top of an area that I respect. But I'm not really using them so much because they break all the time. They're just tiny little swings. The guys that move the market, it's that 100% that's got it's that big yellow one, those larger swings. So I don't have any rules in my trading that use these at all, and honestly, Um, I would be totally cool going to my indicators and talking about, let's see if we can find the one-to-ones on here. I don't even know how to find it. Somewhere there's a setting that gets rid of them. Joel, so okay, we'll talk about it. Let me bring it up. Where's it at? There we go. Now, this is awesome. I like it. So this was put together, and it wasn't John's plan about the reversible bar. Guys, it's not a plan about reversal bars. It's not at all. It is a way to override the fear, Joel, of buying the market on its way down or selling the market on its way up. That's all it is. Um, if I'm uncomfortable entering the market as it pulls back to support, if I'm uncomfortable selling the market as it pulls back to resistance, I can wait for a reversal bar. It's just a confirmation piece. It doesn't change anything. The rules are still the same, 100%, right? Momentum, clear path. Um, yeah, but it's not a confirmation that guarantees anything. It's a peace of mind, I guess. You're still looking for odds favorable, right? You're still making sure you're not trading in determinations. But check it out, Joel. So everything says up. It's 50-50. You get a pullback, and you're just like, man, those large triggers are down here a little bit. I really want to see something that says let's go. So instead of buying at the area, you wait for the reversal bar, and you take it up, right? Everything says down, but it's 50-50, and you're like, I know where the area is. But I'm not sure. I don't know that I want to get in there. I'm a little scared. I'll wait for a reversal bar and then I'll get into the trade. That's all it is. So John saying as a new user, wait for an up bar, right? Get that, oh shit, it's coming down to me thing gone. I got to stop swearing. I apologize. So you're still identifying the areas. You still know where it's likely to go. And you're just saying, I'm going to wait for a bar in the way. I'm waiting for a bar that says, hey, you know what? We're going that direction. So, for example, trading into a termination condition. Instead of hopping it at the midband, you might say, I'll wait for an up bar. It's still into a termination condition, but at least now your risk is established, right? Instead of just jumping in. So, coming off of support. Smalls aren't quite outside. Everything says up. I know that this is probably where I want to get in, but my triggers are split. So is it going to be here? Is it going to be here? Is it going to pull all the way back to those triggers if it does anything? Hell, I don't know. I'll wait for a reversal bar. I like areas personally. If you said everything is up, but I don't have momentum and I don't have areas inside, maybe if I want to try this trade, I'll wait for a reversal bar off that area of support where the market may continue up. Doesn't guarantee a winner, but your risk is already established. The market started to go in the direction of the trend. I like it. I think it's a great little safeguard for newer users. Or if you are prone to jumping in too early, it becomes an awesome way for you to practice patience, right? Not everybody needs it. Some of you are like, oh, buy it on the way down? Hell yeah, I'm in. No worries. Sell it on the way up? Absolutely. Let's do it, right? But on this one, if you said with this termination, creating the full reversal and all that momentum, if you were going to take the trade, you just waited for a reversal bar. And it made it easier. And if it never happens, well, then you don't take the trade, right? So over here, yeah, great question. over here, you're thinking to yourself, man, the path is clear and everything is down. And I think it's going to keep going down. And there's only two divergences. And I'm going to bet dollars to donuts that this is where the market wants to go down from, right? We saw a couple of these yesterday. So, Joel, it's not perfect. So you say to yourself, if it's going to go down from the mid band, I'm going to force them to give me a reversal bar before I enter that trade. Does that make sense? Alan, did you have a poop moment? So, Joel, great question. I hope that clears it up for you a little bit. I think your recognition of areas is solid. Oh, sorry. Colorful. I've got to stop that. Sometimes I forget. English major. I really think words only have the power you give them. I know you are. So I'm into a termination, right? I've got momentum, but I'm into a termination. I've got a termination that creates a full reversal, but I'm into a termination. What should I do? Should I hope it breaks? Should I wait for the smalls to get above, so at least it has the potential to break? Should I wait for small and large to get above? What do you guys think? We're in an uptrend. We have momentum, but there's no indication that this area is going to break just yet. Does that make sense? Nick, I went through that same little thing that I went through with you. Price reached it, but the triggers didn't break it, which means that if price gets right here, I'm probably not jumping in. It's kind of cool when you start getting the rules intact, when you start seeing them. Miss Debbie, have an awesome day. When it starts to become a little second nature, it really takes you about 4 seconds to make a decision on whether or not it's time to take a trade. The trend is up, the momentum is up. We're coming from a termination that created a full reversal, but I don't have a clear path, so I'm uncomfortable taking a long trade if it pulls back. What do you guys want to talk about? We got about 30 minutes, give or take. If you waited for the reversal bar, guys, you did great. I think that's a great example of when reversal bars are advantageous. And there it is again. When it starts to break and looks like it's going to break, waiting for that reversal bar at least gives you a fighting chance. Same thing here. Not the best trigger look. The area is a little outside. If you wait for the reversal bar, it gives you a fighting chance. We see it 3 times. I'm not saying that you have to do it. I'm comfortable at areas, but if you're not yet, that might be a pretty cool way for you to work through that a little bit. What would you guys like to talk about? I'm just going to start backtracking then. Right there, Alan. Where my rules were met. So let's look. Let's look for an opportunity. This one was into a termination condition. I'm not really interested in that trade. This one has a clear path and odds favorable. On the NASDAQ with the small triggers up this strong, Alan, I would have entered on the close on the correct side of the small triggers. That's what would have gotten me into that trade. The rules have to be the same. The rules do not change on the large chart for the NASDAQ, guys. It just happens a lot faster and tends to overrun areas. So, Alan, I probably would have taken this one at the area because my small triggers were a full bar away. Taking profits at divergence. When this one printed, I probably would have exited my next contract about right here with the small trigger so close. And then as it pulled up and nothing changes, that's where that reversal bar, that close on the correct side, Alan, that's my criteria for NASDAQ. I'll share this picture with you too. The large chart never changes. The large chart has to have odds favorable. The large chart has to have a clear path. And I think that on the NASDAQ, it's even more imperative that your rules are met. And then the things that I look for on entries. The pullback starts, I identify my areas, and as I pull back to my areas, if my small triggers are more than a full bar away, the same idea with the gap theory, but this time on your entry chart, if my small triggers are more than a full bar away, Alan, I'll enter at the area. And if they are closer than the reversal bar marker, if I don't have a full bar, the same pick for any other trade inside of favorable large triggers. There's my window, right? So as price pulls down, if these small triggers get below the reversal bar marker, I'm in a holding pattern. I'm waiting for a close on the correct side. If they stay up above, then I'm in at the area. And what you'll find is shorter little pushes, it's easier to get in at the area. The further away your areas are, the more likely those strongs, smalls are going to be there. So if you were waiting and hoping for that mid band, these strong small triggers keep you from jumping in. You have to wait for things to slow down to get to that correct side. And we'll look at a couple different examples of it on the NASDAQ. Everything says down, odds favorable. There's your pullback, and here's your areas. And this is a great picture, Alan, because check this out. The small triggers were not a full bar away, and they act as support. And then it pushes up a little bit higher, and I got slipped on this one. But I waited for the close on the correct side of the small. The rules were the exact same, but because the small triggers were less than a full bar away, I waited for the close on the correct side. And it made it pretty easy to get down to that next area. But if I jumped in at 1-to-1s or I jumped in at the mid band, I've just got to sit through a little bit. It's almost the exact same entry. This one says never fight smalls. Everything says up, everything is strong. When it gets to the area, the smalls were less than a full bar away, so I sat on my hands and did nothing, and it saved my bacon because the market kept pushing down. Does that make sense, Alan? And then here's one with the smalls a full bar away. Everything says up, everything is cranking up, and it pulls all the way back to the area support inside of favorable large triggers. Look at how far away the small triggers are. Alan, if I get in at the area, when it reaches those small triggers, I'm break even, right? Or I'm taking quick profits. And then at this point, I got nothing to worry about. It has a chance. And then that, I think, is the same trade. Everything is up. It's flying. Instead of waiting for the close on the small, because they're so far away, I'll get in at the area. Because the smalls were so far away on this one, I'm in at the area. It has time to manage rather than creating that enormous risk. And that's one of the things. I have one on here that says worth it. If it pulls back to the area and everything's up, and my close is this far away, do I want to put that much risk? Sometimes I can't justify it, and it's okay to miss it. I have a stop order waiting for it. So what I do, let's see where we're at. Let's say I'm waiting for a reversal bar to get me in. I will literally put buy stop. Whoops, I missed it. I'll put buy stop where the reversal bar will form, and that'll get me in. Because then it guarantees that I have a reversal bar, right? So this one's odds favorable. This one is as close to a clear path as you can get. And this is support inside of favorable large triggers. Guys, this is the S&P. I'm not waiting for a reversal bar. I've got a window of opportunity that is literally that big. Termination creates a full reversal. Full reversal creates a clear path. Clear path gives me a reversal bar. At the time of the reversal bar, I look from my highest point of the triggers to the lowest point of the triggers, and I refine that area to my highest point of support, to my lowest point of support, and this little green box becomes the area where the market is most likely to continue. So for all of you that are brand new, this is what you're working on for 20 days. Going through that process on the large chart. Termination creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum and a clear path have me looking for a reversal bar. At the time of the reversal bar, I identify my areas inside of favorable large triggers, and I just put a limit order. And now I'm powerless. They either come back or they don't. Very nice. So Nick, everything says up, right? Right off of support. If divergence takes you out, you're cool with it. You made money. If it never pulls back, you're looking for the next areas. I love it, Nick. And you waited for confirmation. You waited for that pullback. And you had a clear path. That's what we call applying lessons. Nice job, man. Which chart do you read every morning? The one that I posted, Alan? Who is this? Joel? That looks about right, doesn't it? As you take trades, post them in here. We'll talk about them. So, Joel, what does your box represent here? Because it's from the top of the triggers to the highest point of support. Did you you've got your entry where the market's likely to continue. You were just getting engaged to that highest point of support inside of favorable. I like it. That is a rules-based pre-trade. And dag nabbit, it's just not coming back, is it? If it does, didn't our window of opportunity move? Isn't now that the only line inside of favorable large triggers? Should we hope for a pullback still? I think so. My rules are still met on the large chart, aren't they? You got to ask yourself that. Uh-oh. There's yellow 1-to-1s. Right there at 40.75, right? Oh, and none of the triggers broke. Dang it. That doesn't fit my rules anymore. Another time when waiting for a reversal bar gives you a fighting chance. You're very welcome, Alan. Thank you for taking the time to ask the question. We do the same thing every day, guys, and it clicks for everybody at a different rate. It really does. Thank you for that. Terminations were my biggest, I mean, they were the bane of my existence, guys. Termination conditions killed my trading in the beginning. Clear path, I have found, is one of the easiest ways to keep yourself out of trouble. Having momentum, this market's had momentum from here, right? And it really hasn't slowed down. And this is common. Here it didn't have any momentum, and look how easy it was for the fight to ensue. And I think it's a great lesson. We missed the 1-to-1s by a tick. This is where you can make a decision. With the momentum, missing the 1-to-1s by a tick, am I still willing to take an entry at the top of the window? For me, well, there it is. They caught it. Now it's official. Now they hit that 100%. Fibonacci alternate. It may stop it, it may not. I don't know. I don't have any idea. I do know that my statistical advantage has gone away, that my advantage of a clear path is no longer present. That's all I need to know. Sit and wait. Did everybody see that picture from yesterday? Do you guys remember in class we sat here for 3 hours waiting for crude oil to break out of its range? Took over 2 hours for it to get out of that range. And once it did, it was a 100% high probability trend trade. Rules met. Doing nothing 90% of the time and then never missing the opportunity when the advantages are there. Guys, that's the difference. If I take 4 high probability trend trades a day, that's it. 4 high probability trend trades a day. I'm probably going to lose one, right? If I make $100 on the first one, I make $300 on the second one, I make $300 on the third one. And then I lose 150, right? That's 7. I lose 150. I'm at 550 for the day. 4 trades. That's it. We'll say 50 of that's in commissions, and that's super high. Isn't $500 a day, $2,500 a week, or 10 grand a month? That's a pretty good month by anybody's standards, I think. That's 4 trades. That's being patient. So what happens on that 550? What happens on that $500 in profits from high probability if I decide to break my rules and I give away 200? And then that pisses me off, so I take the same trade again, and now I'm down to 100. And I went from having this easier, less stressful money, right? Waiting for every advantage. And because I couldn't be patient, because I couldn't wait, because I couldn't embrace the advantages, I start giving it away. And there's nothing worse. Like, losers are a part of it, guys. I'll take losers all day long. I don't have a problem with losers. Losers don't faze me in the least bit as long as my rules were met. As long as I had those 3 advantages. Because what it means is that I have a trade that has been proven to win more than it loses. I have a trade that statistically gives me an edge each and every time I take it. And the second I deviate from that, I can't expect my win percentages to go up. When I deviate from that, I can't expect to be as profitable as I would have been if I had those advantages in place. One of the phrases that I hear sometimes is, I know that this wasn't the rules met, but it was only 5 ticks, right? It was only 5 ticks. Well, 5 ticks on crude oil is $50. And if it's only 5 ticks 5 times a day, well, that's $250. And that $250, just 5 ticks, is suddenly $1,250 a week. And that $1,250 a week becomes $5,000 a month, and only 5 ticks. And my math is probably messed up, but you guys get the idea. And then Ron, no rules for this turkey. Ron says everything is up and everything is strong, so why not? I notice it's on a 1 lot, Ron. Ron's seen this enough to know that it usually gets to the second fib. I'm surprised that you don't have one here, though. That looks like everything, right? Right around 35 to 39. That's the one I like. I like the pullback to support then going. I've been known to get in right here. Snorri, that is not a trade based on anybody's rules other than Ron's. That's directly into a termination condition without odds favorable momentum. That's experience. That is a year with the software paying dividends for Ron. But if you look at Ron's trades, they're all basically the same. It's all pretty much the same thing. You will, Joel. When it's wonky. NASDAQ made it. S&P made it too, didn't they? If only I had giant red lines to let me know. That's the hard part. The hard part is the patience. And then, I think we had the breakthrough yesterday, guys. Losing trades don't mean bad trades. And does that make sense to you guys? Losing trades don't mean bad trades. You can have every advantage. You can have the best look in the world and absolutely get slaughtered. Because 20 to 30% of the time, it's a cost of doing business. You're going to lose. We don't control the market. But how are you going to react to that loser? Are you going to down talk yourself? Are you going to decide that there's something wrong with the plan? Or are you going to take that same trade 20 times and see where you end up? And I think that this is the challenge that everybody faces as a day trader is we find success in simplicity. We find success in doing what we know is right. And then we start to deviate, and then we start to tweak. And then we start to go, well, I'm going to go ahead and trade into this termination condition because I saw it work last time. I chose not to, and it broke, so I'm going to break. And the human brain loves to remember one thing, right? You're saying, well, everything is up, I'm trading into this red one, but you completely forget that the same look with better momentum turned on a dime, right? That the same look with better momentum turned. That the same look with better momentum failed. The same look with awesome momentum failed. The human brain has a very short span. And then you lose two in a row and you start to question everything, right? So if you lose 2 or 3 trades in a row, the first thing that I do anytime I lose a trade is I go back to, did I follow my rules? And this is where you have to be honest with yourself. I lost this trade, did I follow my rules? Or did I put something like, oh, Nick, you're going to be mad at me for this. Let me find that picture. Did you write something on the chart like, dun, 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 dun. There it is. I love this. Sorry, Nick. Everything looked good except for this 1-to-1 line. Guys, what you write on the chart, annotating your charts is very powerful because you'll use key phrases like but, except, almost, kinda, I thought, I hoped, I wished, rather than rules met, right? So this is one of the traps that becomes easier to avoid if you write on the chart every time. And I love that you did that one, Nick. It's not odds favorable momentum, but. Well, it's not really a clear path, but. I didn't have an area inside of favorable large triggers, but. Right? So you're going to start to find this pattern of how you break rules. So Snorri, every time I lose, man, I go back. Did I have odds favorable? Did I have a clear path? Or whatever your plan is. Was my plan met? Was my plan that has been proven to win more than it loses? Did I follow it? Or did I tweak it a little bit? Did I break my rule? And guys, it's okay to tweak it a little bit to break your rule. D-Rock, you're in the process of doing that right now, right? Looking for more opportunities. But what you have to do is you have to do that on simulator, and you have to build a base. It has to be scientific. Go find 25 of the exact same looks, right? So D-Rock, go find 25 50-50 looks from a good top with one divergence and strong triggers. Does it win more than it loses? If it doesn't, it has no business in your plan. If it does, get an idea what the percentage is. What does it win? Does it win 55% of the time, right? If it does, doesn't that mean that you're going to pretty much lose every other trade like that? What's that going to do to affect your bottom line? If you're taking those momentum trades, and you're holding too long, you're getting stopped out more than you're not, does it need to be in your plan, right? How does that serve you? Is that acting in your own best interest? And I think that one of the biggest problems, and this is just from experience, not only my own experience, but my experience working with you guys, and that's it, Snorri. It's a sample. You have to have a sample. But the one thing that I've found, and guys, this goes back to when I was training managers in a previous life, is everyone, Ron, I love it. Everyone pretty much follows this plan to the letter for about 30 days. Everybody embraces advantages for about 30 days, right? Everybody sticks to the plan because they know. They're like, oh my gosh, this is my path to success. And then right around 30 days, human nature kicks in. And you're like, well, if I'm winning 80% with this, couldn't I win more? Couldn't I make more? Couldn't I get more? Guys, if you can't make a living off 80% winners, I don't know why you would drop that, right? I don't know why you would drop that. But right around 30 days, human nature takes over and you start to fight the plan that brought you success, right? You start to trade against a couple divergences. You start to not quite have a clear path. You start to take entries outside of favorable large triggers. And what happens is you're so busy looking for the exceptions to the rules that you miss the rules and you start catching the exceptions and you can't figure out why you're not winning anymore. I know it because I've lived it. And the better you become as a chart reader, the more exceptions to rules you're going to see, and the more imperative it is that you follow your rules, that you stick to the plan. Dance with the girl you brung, right? To quote the famous Ron C. Don't trade in determination conditions because the background's green. Don't trade in determination conditions because the background is red. Don't take weak trigger shorts. They don't serve you well, right? Wait for the advantage, and when it's present, kick a little ass. That's it for me today, guys. Welcome to Nexgen, you guys that are new. I'm so stinking excited to have you here. I can't wait to help you guys get to where you want to be. Nick, great job, dude. Great job today. Taking those lessons. Day 3, and you're already piecing it together. Gino, it'll be easier tomorrow, I promise. Books, AC, Fern, it'll be easier tomorrow. I promise. By the end of next week, you're going to be like, holy smokes, I remember when I didn't know anything, and now I know everything. Um, if you trade this afternoon, guys, take some pictures, bring them back. Yep, Snorri, you're absolutely right. You set your daily goal, but you don't know when the trades are going to come. You wait, nothing is happening, and you say, damn, I'm not making money. Didn't we all do that yesterday? Let's look at the picture one more time. Didn't we all do that yesterday? I can't make any money when the market's like this. It's not going up. It's not going down. It's caught in between areas. 3 stinking hours. And then it was easy. Then it was so easy. Guys, this is the hardest thing that you'll ever do. The hardest thing that you will ever do is absolutely nothing when there is nothing to do. Joel, take care. Sydney, have a great day. Guys, I appreciate you being here. That's it. That's day trading in one picture. That is day trading in one picture. Don't do it. Don't do it. Don't do it. Oh, do it. And then you go. So guys, you're going to a shrink to fix? No. You want some help with that, Snorri? And I don't know if you've done this yet. Guys, I'm a huge fan of this. Let me go to the Nexgen YouTube page. When you scroll down to the bottom, guys, Mark Douglas. Go to YouTube and look up Mark Douglas. It's this one right here. That's short. So let me find his, the one, this one right here. Think like a professional trader. It's like a four-part series. Um, oh my gosh, this will change your life. Play it at 1.5 times speed because he is the king of awkward pauses. Man, if you don't have anything going on this afternoon, watch this video. It'll remind you that you're not in charge. It'll remind you that trades lose. It'll remind you that you need a statistical advantage. And it'll remind you that you have zero control over the market. Zero control over the market. The only thing you can do is trade a statistical advantage. So there's some homework for you guys that are working through things. Termination for the win. I absolutely love it. But all of my triggers are above these areas. Yuck. Not going short yet. Guys, have an awesome afternoon. I appreciate you being here.